Salam. And I believe that the cocktail did not rob you of the benefit of this day. We are expecting us to be vigilant as we were yesterday. And just want to welcome you once again to the second day. This day is very exciting because it's a little bit packed, but with the benefits that we are all looking for in the digital transformation and the digital platforms. And without I forget, I would love to share that in the evening we have a dinner gala, which is very important event for us to continue networking. And the venue will be communicated shortly so that we can also enjoy our days here. So today, I think the timetable has been availed to you, but we are going to look on the key aspect of the technical presentation regarding advanced financial inclusion through capital markets, the role of digital platforms, and the retail participation. But before we jump into the core business, allow me to welcome our sponsors to share some remarks with us so that we can have the blessing of the day. They say the one pays the piper call for a tune, and therefore we cannot ignore that. So if Kado or Sarah to be present, I would love to call them forth for the initial remarks. I'm told they're outside. Tajiri wa Kosei. So maybe he's, yeah. So on the same token, while the main sponsor is arranging to come on the podium, I would love to acknowledge the sponsor that we have. We have platinum sponsors. Those are Kado Securities Limited and CRDB Bank PLC. Our gold sponsor are Infotech Group, Stanbic Bank, Orbit Securities, UTT Amis, NBC Bank, NMB Bank PLC, and the silver sponsors includes Solomon Stockbrokers, Zan Securities Limited, iTrust Finance, Victoria Finance PLC, Global Alpha Capital Limited, National Security, Social Security Fund, STT Technologies, and International Finance Corporation, IFC. And I think collectively, let's give them the big round of applause, tafadhali. Tuwapigie makofi mengi sana. I'm sure by this time now, yeah. Can we start with Kado, please? Or Sierra DB? Okay, so sponsors will be availed the minutes they were booking now later on after the break. For now, ladies and gentlemen, let's jump to the business of the day. It's my honor and privilege to invite on the stage Mr. Ali Othman, CITO from Dar es Salaam Stock Exchange, to do the presentation that I mentioned before. And after that, we are also going to have another presentation on technology partner Sonia Laxton. Naomba makofi tafadhali kwa Mr. Othman. Karibu sana.
Thank you. Good morning, distinguished delegates. It is a pleasure to welcome you to the BAFM 2026. Today, I'll be speaking a story on how we as Dar es Salaam Stock Exchange, we have transformed Tanzanians' success in financial inclusion into investment inclusion. So the theme toward this topic that as a country, we have made tremendous step towards financial inclusion, but at the exchange, we feel we have a task to make sure that we turn the same into investment inclusion. So my presentation, basically, due to time, will be divided in three key themes. Number one, I'll share the numbers and the facts when we say Tanzania we have achieved financial inclusion, and then I'll explain the gap that we as an exchange we have tried to fill into that, and lastly I'll show what has been the impact. So basically at the exchange we went to develop the technological platform that will cater for mainly three key issues. So issue number one, basically we wanted Tanzanian to make sure that they are getting into the market and own the security that's or product that's available in the capital market. Number two, since you have the security, the chance that you can get something out of it, such as dividend. And number three, because this is a capital market, so if you participate, meaning you are buying a security and we are building the capital. When we say we are building the capital, we are building the capital for the SME, for various institutions, and thus we are building our economy. So that's the main theme that we as an exchange, we said, let's. So this is just the presentation flow. When we go to the next slide, we'll see everything that has been shown in this part. So our case started in here. In fact, in 2023, we had this FinScope report in Tanzania that was showing on which financial service as a country we are using. The numbers they speak to themselves, that medium Tanzania, by then we were saying, can save, send money, receive money, and access formal financial service. But when we come to the last part, which is the capital market, we see a problem. So we're talking about mobile money, most of service, many Tanzanians, they were able to access it and use it. Commercial banks, those are the numbers. But the key issue was here on capital market service. So we as an exchange, we felt obliged to make sure that we make Tanzanian to have investment inclusion, rather than to say that we are doing well because in terms of financial inclusion as a country, the numbers, they speak themselves. So this is a key issue. Most of the service, you take on the numbers, financial inclusion, almost 70% of the, 76% of the population. But by then, that was 2 years back, 3 years back, the market participation was only 0.5. So when we talk about transaction finance, day-to-day use of the money through digital means, the same we have done very well, but when it comes to have the asset in place in the capital market space, that was a gap that we as an exchange, we had obligation to make sure that we fill that gap. And based on the insight of the report, the same report, you take, when we say financial inclusion, what these people really may do with their financial service that they are in that journey. So we have the money, but most of the time we use the money to make sure that we pay for our daily usage. So these are the numbers that are coming from the FinScope report 2023. and it tells itself like we have the money, but all that we use is to make sure that we pay for the groceries and the things that we are that make our life moving on day to day. So another information that we can find in these slides is that why we had that big success story as far as the financial access service is that as a country have good infrastructure. This is a report from the TCRA. Of course, this is very latest this year. When we take how many people they have the SIM cards, we see number of the SIM card because one person can have more than one SIM card. When we talk about the internet coverage, when we talk about subscription, when we talk about, we have the very good population. Most of us in Tanzania, over almost 50%, they are the adults. So, and even on the economic indicators as a country, we are doing very, very well. So if you take all these in place, you see that for the service that require for someone to have access to the financial service, the infrastructure is already there. And the culture is already there as a country. So these are just was a proof in building my case. So to say and to summarize, we have the people. That's the population. We have the digital access, that are the numbers. Transaction culture, everything now, people they're doing through technology in Tanzania. When we come to the economic indicators, I think we are doing well as well. So as a country, we say we are ready for anything that relate to the financial service. So at the exchange, we had this case, and this is where we started with our digital transformation journey. Like, if we want to make sure that we are doing investment inclusion, this was a base. Like, we have everything as a country. Now, how can we make this possible? So this is summarize what I just said. So another thing, now I'll jump what actually we did at the exchange. So if we take our first strategic plan and the strategic plan that we have now, it all talk about inclusion using technology. So this was a case, like we as an exchange, we are supposed to put mechanics in place that will allow every Tanzanian to access the market. And at a management level, at the board level, we sit down and say, it is time now, we need to come out with something that will make sure that every Tanzanian can access a service that is available in the capital market space. Then that's where we come out with our mobile trading platform. And doing that, of course, back in the year 2022, we got some grants from FSDT, donor funded. And then we work with the government to make sure that we'll connect our system with the national identification system. And we work with those access channels, USSD, web, and mobile operators to make sure that we can make more visibility of the same. So this is where we say infrastructure on how we'll deliver the projects. So our key issue, which we really wanted to solve, number one, was that our market, when we talk about accessibility to the service, number one was on the distance from the service to where the broker they were. Initial, if I'm investor, I want to access the market, most likely I was supposed to come to the broker. So, and all the broker, they are here in Dar es Salaam. So it was just a chaos. So broker distance. Number two, on the KYC, everything was manual. I was supposed to take all my documents to the broker. And then about the payments. Every payment, I was supposed to pay to the bank and then bring the proof to the broker, like this is what I've paid if I want to buy shares and or any security. And the other issue was on the visibility. If I want even to see my security, I was supposed, or I was required to go to the broker just to see my portfolio. So all these were the issues that we said it hinder the capital market development. That's why we came with this mobile project that was owned by the exchange. And our key issue was that this project to solve all this access, KYC issue, the issue of payments, and we want every investor to see his or her portfolio on real-time basis. So we came out with this project to automate all of this challenge that we had as an exchange. And the project was very successfully. So this is the proof from 2022, and I compare at least the situation year to date. So back in 2022, how many investors we had the access the market through mobile trading was only 11,000. But now we are talking, as of now, is almost 265, 898. This is the latest record I just checked some few days back. We talk about trading. So that was turnover in the year 2022, 0.75 billion. But if I took the numbers year to date, we are almost surpassing 425 billion. So this is the uptake and the real transformation that we brought after having this technological platform, and that's the volume. So all this is saying that before, especially on the issue of investors, before having the technological platform, our market for the market to get new investors was IPO driven. So when there is IPO is when we'll get the new investors. But now this is another graph. Now here I'm comparing what we have in our CSD, what was the growth before the technological platform, and the growth now. So we see I took some few years here, 2019 up to 2021. This was a base. Per year we could have only 1 or 2% investor growth. But now, post 2022, when we had our technological platform, those are the growth. We see at least now per year, the growth, it can go up to 20% per year, which is a really very positive move. And it really answers the issue of the access and accessibility to the market. And another good thing which is worth to note here is that prior of our MTP, our CDS has almost 540 investors. And all these were brought to the market through IPO. But post-technology platform that we put in place, and we really have IPO drought since then. There is no IPO in place, but we have had another almost 270 new CDS in that place. So we see that the whole issue of access, investor to come to the market, it has been solved through technology. And this is another interesting fact. Who are these new investors who are coming to the market? So if you take the numbers, we see that all new investors, almost all of them, of 74%, they are aged between 20 and 39. So this is telling us for sure we have investors that will be in the market for so long. And if you look the whole factors, that's why all this young generation is coming to the market. Number one, I can say we are doing continuous education to our investors. Our brokers, they are doing very well. We thank Central Bank through the Certified Financial Educator. So every week there is a seminar which is going online. That's why we are getting all this number of new investors. But another thing we have to admit, even our education system is working as a country. So we see we have a good young generation they know where to invest. And this is really answering the puzzle which we had in before for how people they'll be accessing the market. When we come to the order size, of course, I've taken the data based on what is our actual purchase behavior now. I didn't talk for, because before, prior of this, if I want to buy shares, I go to the brokers. Definitely, most of the time, I'll not go to the broker with 10,000. So unless I get 1 million, then I'll go to the broker. But having MTP in place, you see, people with less than 10,000, they are buying shares. We see many people having between 10,000 to 100,000. They are on daily basis, they're accessing the market service. And this is answering the whole issue of making sure that people, they own the assets rather than having the money and every day we use on buying things, clothes, which is good, but at the end of the day, we have to invest for the future. So we see there are so many orders that are coming from the small tickets, because the market now, to put the order, you can put 24/7. At least it's showing that through this technology, it has worked. So just to summarize, as I said, our key issue by then was to make sure that we want to change from the everyday just using our money to go to the to make people have the culture of saving. We have seen that idea is working up to now, as I've just shown, and by everyday saving, that is possible. Productive ownership, people, they own the asset, but also is making the liquidity into our market. But all in all, as it was said yesterday, we are contributing a lot toward Vision 2050. It has just started, but we see all this participation, meaning we are we are contributing in the capital formation for our companies. I didn't put that slide, but if I take the subscription that is happening to our market for every product which is coming is oversubscribed, which is telling that infrastructure is working, the culture is working, and the whole idea here is working. And another good thing, most of the IPO, now they are passing through this platform. So how did we make this to be possible? As I said, digital KYC. So far, our platform, it has been good. We have some challenge here and there, but in terms of cyber, we are trying to do very well. Investor education, it has been continuous. Every week there is a seminar. Of course, there was a participation of the broker. We manage all this change along the process. In the beginning, broker, they had a lot of resistance, but now we are really working well with them because they are supporting the platform. And as well, because investors, they can see everything. This has been the key issue towards making this platform to be very good. So for fellow African Exchange, what I can say, if we really want to help our people, and if you want to take something from what we have done as a country, number one, I think in most African countries, we have done very well when we talk about mobile issues, mobile money, and technology as far as reaching the investors, our citizens where they are. So we need to leverage on the existing technology that we have as a country, as our countries in Africa. Another thing is KYC. Even in our case, at the beginning, there was a lot of issue, like what we are doing is not meeting KYC standard. But we said we are taking information from the national ID. National ID is answering almost four questions: who you are, where you are, what you possess, and all those kind of things. So if we talk that information, it will give you, as a broker, a very good starting point for you knowing your customer. All right. Another thing is, as I said, to involve the regulator. All this, every step which we were doing, regulator was approving, so, and working with brokers. But another thing is to ensure that the platform can make investor to invest 24/7, even with a very small amount. And lastly, to make sure that if you're building your application, the application must be scalable enough to include everything. Like in our case, we are doing with equity, but we have IPO in place. Soon, we'll go into bond, and even to make sure that we adopt modern technology such as AI, so that when investor access the platform, at least the platform can give investor ABC. So my closing remark will be, don't wait for the investor to come to the market. Take the market to where investor already transact. Thank you all.
Another big round of applause for Mr. Othman. I can assure you I'm a living testimony of what he has just said. I'm a millennial, and one of my challenge was to access the market. One of the Gen Z challenged me, why are you not investing in stocks? Now, with all the simplicity DSE and other stakeholders have done in the market, I did not upgrade my brain, or my mindset rather. I was very conservative to access the market. But after the right information and a right pressure, I decided to venture into shares and investments. For it to be a single click away, it was amazing to my mindset, which was very practical at that particular time. So for what was preventing most of the millennials and baby boomers to invest, it was the cumbersome procedures that Othman has just addressed. It's a real issue. And now the booming that we are seeing in Tanzania, digital transformation has really contributed massively on those changes. So hongereni sana DSE. Makofi sana. Big round of applause. So the digital transformation is a real kind of like the cure of all things. Ni wachache tu wale walikuwa very aggressive sana. Kuna makabila sitaki kuyataja, ndio hao ambao walikuwa wanaweza kuwekeza kwa muda mrefu. For now, let's have a leisure of diving into a deeper technological perspective. And I would love to invite Sonia Laxton, who is a regional business manager and sales leader of Infotech. A big round of applause for Sonia, please.
Good morning, everyone. Thank you for having us. My name is Sonia Laxton, and I'm the Regional Capital Markets Business Manager for Infotech. I'm very happy to be here today in this room. I'm going to try and speak slower than my normal speech pattern, which is very fast. So if there is any point in time where I've gone by too quickly, please raise your hand, ask me to slow down. Not an issue. So today what I'd like to do is not just go through the slide deck that you can see over here. I want you to actually get a feel of who we are, what we actually do, and the reason why we feel so comfortable and at home in a room like this. Just to give you a little context, oh, I have to move this. So just to give you a little context of who we are, we've been doing capital markets technologies for the last 30 years, which, when we translate it, actually means several market cycles. And we've been here through regulatory overhauls. We've been here when we've been doing electronic trading shifts. We've been here since then, and that just tells you where we are coming from and when we have context for what we are doing. We do this with a team of 750 professionals, serving more than 250 customers in over 20 countries. And the best thing about this whole thing is that when we deliver this infrastructure to people, the structure is based on guarantees and confidence that comes through our certifications and our standards. So when the customer receives their product, they understand where it's coming from. There are frameworks that make sure that you get a quality product. You don't have to worry about what's being used. CMMI level 3 ready software, ISO certifications for security and all of that. Now, what I'd like you to see in the next slide is our pattern. So as you can see, we are in Africa, we're in the Middle East, we're in Asia, and that is just a way, if you look, I'm going to look at this again. What we see here is that we have various different markets, which are all very nuanced, very technically different. So in some places we have very thin liquidity, in some cases we have regulatory overhauls that are happening in real time. We manage all of that. We work with our clients through all of that. And that's where we have basically made our footprint. Now, we look at our product suite. I'm not doing well here. Okay, so that's our capital markets product suite. We're looking at Infinium, we're looking at Capizar, we're looking at Marlin, we're looking at SwiftRate. Infinium and Capizar are basically our major products. And then we have Marlin, which is for our brokers, for the front and the back office for the brokers. And then we have SwiftRate, which is basically the mobile application that sits on top of all of this. Now, how do we deliver all of this? We deliver this through a dedicated team. If you remember, we said 750 professionals, right? Of those 750 professionals, there are 250 professionals that are specifically capital markets. So I don't have to vie or fight for my customers to get a space in the support market or in the support team or something happening in terms of developments. I have a dedicated team, and they work only for capital markets. With them, what do we have? We have 150 customers, 5 proper offices. The 6th one's just opened up in Kenya. We do trading and post-trade. We do market surveillance, auctioning. We do the broker. If you look at these products over here, you see that it's a whole ecosystem, because that's what capital markets are. We're not one specific product. We're not doing just trading. We're not doing just depositories or anything like that. The capital markets is a whole ecosystem. I love that word because it integrates with each other. And you can't deal with something in isolation. So I have one system for ATS. I have one for CDS. What happens when you're upgrading? What happens when you want something different? What happens when you want to do something across the board? Because it's one capital market. You may have different systems in it, but it's actually one capital market. So you have to then worry about all the other things that are coming through. That's why we like the fact that we are one ecosystem. Just to give you a little detail of what we are now, you can see the product details right here. I'm not going to take you through them. You're all capital market people. You're experts in it. You know what you want from your market. But what I want you to see in this slide is, what you can see is not all we have. So tomorrow, if you have a need, and you can't see it on the slide at the back, it doesn't mean we don't have it. Just to give you a live example, one of our customers in Asia wanted to see a live system before signing on. They chose the customer. We didn't, obviously, for the bias, did not say, well, go to this country and have a look at their system. They chose a system with one of our oldest clients. It's a small market that they chose. And some of the products weren't there because the market is small. You can't really have those products there. And in this case, derivatives were missing. So they came back to us and they said, well, you don't have a product. And we said, we do have the product. We showed them the demonstration. We see, in this tab, that's where the derivatives are. What you saw in the live market is a market that doesn't need derivatives. So it doesn't mean that what you see right here is all we have. So these are the major things that we're talking about in terms of the product details. So Again, in this particular slide, I want to focus on one thing, the pre-trade risk management. I want to come back to this in another slide when I'm going to connect it and show you exactly why I wanted to focus on this. And CDS, again, part of the ecosystem. We do everything for the CDS requirement. The platform has all the things that you need. And like I said, if you see anything here that is in a special pain point or is missing, please let us know. And this is one of my favorite slides. The reason why it's one of my favorite slides is probably because I used to be an auditor back in the banking days of my, my other profession. Today, we need to be auditable and accountable in everything. And our regulators and our auditors, in-house auditors, don't have that same support that we give in every other product. We don't give it that focus. So for us, MSS is an actual module. And one of the things that I like about it is that it also, again, my favorite word, it takes care of the entire ecosystem of a regulator. So you can not just check the market, see what's happening, trades, wash trades, pump and dump and all of that, but also, if you put in your alerts, that alert fires directly into a case management. So you don't have to go looking for another system to start your report. Now, you've got a problem, you are looking at the thing and it's telling you there's a problem going on, you're doing your investigation, and now you need proof for that investigation. Somebody asks you, oh, well, has this happened cyclically? Has this happened before? Now you're going to go into another system and get the data dump out of that system. No, you don't have to. The same system will give you access to market information of that day that you're investigating, tick by tick. So what this ends up doing is it gives your stockbrokers, your shareholders, everything is about stockbrokers, your shareholders the confidence that everything is being done the correct way. The regulators are following what they need to be following. And then we come to our broker system. So in the broker system, we do all the things that you need to do for your trading order management, dashboard and analytics. These are things that are specified to what the broker wants. So your dashboard is the way you want it to look like. So if you want it to show your own market, that's what we'll show you on the dashboard. You want it to show just what you're doing in terms of your trading, we'll do that for you. So it's specifically on what you want to do. Because it's device agnostic, it allows the brokers to have a proper digitized experience without having to invest in technology. So one of my favorite things is the simulator here. So the simulator is talking in real-time market data. So whatever's happening in the market right now is what you're going to work with in the simulator. So very important when you're looking at a retail market that you want to bring into the investment space. So we want to encourage our investors from the retail market. But how do we do that when they're not very comfortable with what trading is all about? Trading hasn't had a very good reputation. I had somebody tell me yesterday, oh, cryptocurrencies. I'm like, yes, but you know, things have moved on from there. How do we do that? Now, I can give you a simulation, which everybody does, with dummy data. But dummy data doesn't make you feel like you've actually done something in the market. There's the market right there. There's the data you have. Work with it. See how your actions, your decisions impact and happen in the market right there, right now. Makes it a little bit more real. That's how we train our investors to come on board and become actual players in the market. And in the back office, one of the things that a lot of brokers have a problem with is because, again, ecosystem, it's not the whole ecosystem that deals with what's happening in the broker space. They usually end up doing patches or applications that work from here and there, and they have one for their accounts, one for this, one for that. But what happens in that is that, as you know today, data is king. That's what's selling today. That's what Meta was all about. You're not accessing, you're not really enriching yourself with all the data that you're accumulating with your clients. With the back office for Marlin, you have the ability to do that. So you can run your own CRM campaigns. You know what your customers are like. You understand, well, this particular customer is going to be happy to do this trade. Maybe for Independence Day, I'll give him a discount. People who trade over this amount of volume will get this much discount. You can do all of that with this because it gives you the access to that information. It's in the system. Utilize it. The other thing is, usually you have another separate section for doing commissions and billings. Part of the system. If it's doing the trading, if it's pulling in your customers' information, why can you not do the commissions with it? It should be able to do all of that with it. The CRM campaigns, as I've just mentioned, the other thing is, because you've got commissions and all of that coming in, then that means you have to do your chart of accounts separately? No. We'll give you a proper IFRS reported chart of accounts. You do your accounting with that. Pre-trade risks, again, pre-trade risks here are slightly different to what we were talking about in the ATS. Here, what you do is a new customer. So like Mr. Othman was saying that there are people who start with 10,000 and 100,000. Put that as a pre-trade risk limit for yourself, for your clients. Any clients, for example, back in banking, we used to do a specific range of credit limits for males and females aged 20 to 30. That's a rule. You can do that. That's your call. Make those pre-trade limits as they suit you. So something that helps you do your business so that you focus on generating revenue rather than managing the information that you're accumulating. Now, the interesting thing about the figures that you can see right now, these were not gathered in a special test environment. So we didn't create a special environment with beautifully done computers with excellent networking or anything like that. This is information that we pulled out for clients in a real client's infrastructure. And this is infrastructure that wasn't just the best, let's be honest, because it's expensive to do that. Just to take you through these numbers, 10,000 orders per second, 5,000 trades with 200 microseconds. But the interesting thing about the 200 microseconds is back to that ATS pre-trade risk element. The pre-trade risk is validated before we give you this 200 microsecond limit. So that's everything done before this limit is done. Including this level of performance, we still do 40% less compute power, and that results in 35% less TCO for you, which for infrastructure investments is a very real conversation. These are our clients. Some of our clients are here today. We have Ghana, we have NSC here today. This is just an idea of what we do with, am I going back? And then, of course, we wanted to mention something about our regional integrations as well, because the interoperability that is a buzzword and a requirement is also something that we want you to see. So we're working on a lot of regional integrations. For example, UMO at Teeth, we've got SADC, we've done ELP. Now, the thing I want you to notice in this one is, going back again, is the Africa concentration that you can see. And the reason for that is because we keep coming back to that. We invest in the substance we feel about this region. So when we're looking at a regional bet, it's not. It's actually us doubling down in an environment where we already have substance. So you would think that we're talking about banking today because there are a lot of customers here who see infrastructure for banking and for capital markets together, and then they need to merge those two together, work through those together. We wanted to tell you that we also have a banking service department, which is part of that 750 department with 235 people dedicated just to banking. 20 years of banking with capital markets and banking industries. Today, with 35 plus customers across the world, we are doing $3.5 billion worth of transactions every day. We have certified partners like Finastra, FIS, and Temenos that gives us credibility, so you don't have to worry about what sort of infrastructure we're bringing in with it. These are our technology partners in various verticals, which allow us to give you the infrastructure that supports the product and the performance that you're looking for. In banking, these are our product partners. We have business intelligence, and then with the software that we use. Contact details, and then towards the end, that's my details. So thank you very much for your time.
Can we have another round of applause to Madam Sonia? Right on time. And we are going to make sure that all the people that are adhering to the time, that are keeping the time that they were given, they'll be the first ones to have lunch in the afternoon. All right, thank you very much. I believe we understood that, and we took the contact information as well. One of the things that have been talked about a lot in Tanzania with regard to capital markets and the boom that I think over the past 2-3 years has happened is that it has been hard to communicate with the clients. And I believe the brokers here will tell you they had one person in the call center, but now they have 20 or more, I believe, right? And among the things that was raised was to have automated call centers so that AI can take our jobs. But that is exactly what digital transformation can cause. So while it may remove some of the employment opportunities, but it eases the way we operate as capital markets. And this next topic that we are going to introduce here right now is exactly what that is all about. So I believe they're going to speak about the challenges as well as how we can transform into a better market access. So the topic is digital transformation and market access. And please allow me to welcome the CIA of DSE, the Chief Internal Auditor of Dar es Salaam Stock Exchange, Mr. McLeod Edson, who will be our moderator. Can we have a round of applause to Mr. McLeod, please? And he's going to interest us on the topic and also call the rest of the panelists. Welcome, sir.
Distinguished guests, ladies and gentlemen, good morning. It is my pleasure to welcome you to our panel discussion in relation to digital technology and market access. To discuss this, I will call my panelists so that we share the thought we have, and then I will welcome you to have some questions or your experience from your country. So, the first one is Rahab. Welcome. She's coming from EGX, Egyptian Stock Exchange. The second one, I have two Godfreys, but I will start from Ghana, FinCap, CEO from FinCap, Ghana. Welcome. Another Godfrey, CEO from Orbit. Welcome, Godfrey. Then I have Davis Kiando, ICT Manager from Dar es Salaam Stock Exchange. So while we are waiting for Davis Kiando, let me introduce the starting point. We have seen since yesterday across Africa and world, digital technologies are fundamentally reshaping our financial markets. And from there, digital trading platforms and mobile investing is very important by seeing that digital transformation, which we are going to share here, is not only about adopting new technology, it's about expanding financial inclusion. Our previous speaker has said, lowering barriers to investments, strengthening market integrity, and enhancing investor confidence, ensuring businesses of all sizes can access long capital through our capital markets to support sustainable economic growth. As a capital market stakeholders, you and us, we have a common or shared responsibility whereby we are supposed to ensure innovation is accompanied by strong governance, effective regulations, cybersecurity, investor protection, and inclusive access so that no one is left behind in this digital economy. Today, we are privileged to have outstanding panelists from different stock exchanges who has various experience on the exchanges, regulators, financial institutions, and so on. I'm encouraging everyone to actively participate in this. So I will start with Rahab from EGX. With the initiatives that EGX has put in place in relation to coming up with mobile trading platform, EGX mobile app, as well as derivatives infrastructure. How has the Egyptian stock exchange or securities exchange used digital transformation to improve market access, ensure stability, and investor protection? Ms. Rahab, welcome and share your thought.
First, I would, just on behalf of the Egyptian Exchange, thank the ASEA for hosting us today and congratulating you for your anniversary. And also, of course, for having that big event. I'll give you first an intro about the quick glimpse about Egypt and the Egyptian Exchange, and I'm going to take care of the time, don't worry. The Egyptian Exchange is established 1883. We were one of the oldest in the world exchanges. We have now 268 listed companies. Our market cap in equities is around 74 billion USD. We have 18 sectors represented in the listed equities. And we cover equities, we cover listed equities, we cover OTC markets, now we have derivatives markets, and we are trading T-bills and bonds. So why I'm just giving that? To then show you what the digital transformation have affected us and how it really affects positively the investor access. In 2025, our indices ranked to top performance in the and even highest in the world. We have EGX 70 achieved 61% returns. EGX 100 achieved 55.3 returns. And when I go to the digital transformation and specifically the mobile apps, that's the question. Few years ago, if somebody's telling me that a 15 years Egyptian is now opening an account, trading through his mobile in minutes, that would sound a dream. But today, it's in Egypt, it's reality. We have implemented, what we have implemented in the tech is already visible. In 2025, we onboarded more than 300,000 new investors in 2025. 80% of them are between 18 and 40 years. But when we came into 2026, in the first quarter, we have uploaded more than 300,000 in just Q1. In 2024, we were the first exchange, largest exchange in number of newly investors in the Arab region. And in the 2025, we were the second, and we are expecting a leapfrog in 2026. And this came with the mobile applications. I here have to mention and echo what have been said and what has been happening in Tanzania, that I give the thanks to the regulations as well. Because we have the fintech law, so everything became regulated in that regard. The digital identity is now accepted. The biometric passports are accepted. And the onboarding, so investors can onboard remotely and securely. And what I can say in that, to add in the what's related in that digital technology is that it should go parallel with investor protection. So our investment in cybersecurity in 2025 has rose by 40% compared by 2024, and our investment in technology in specific or in general has rose by more than 100% in 2025. So we now have more than 15 brokers providing mobile apps. More than 10 market access systems were developed, including the systems for trading T-bills and bonds, GDRs, EJAX mobile application, the carbon trading, and many others. When I come to the derivatives, we have launched the derivatives in the 1st of March 2026 through futures on the EJAX 30. And few days before I came here, on the 21st of June, we have launched derivatives on single stocks. We have, and when I talk about that fintech or mobile application, I think that numbers speaks of themselves. I hope I have covered the question.
Yes, thanks so
Thank you.
much. I'll come back to you, but let me go to Mr. Mason from FinCap. FinCap has been at the forefront of driving market access in Ghana. From your vantage point of view, as a leading broker-dealer, how exactly has digitalization shifted retail investor behavior, particularly in moving clients away from tradition or manual fixed income trading towards real-time digital portfolios? Welcome for that. And
all right. Thank you very much. Before I answer your question, I want to thank the DSC for inviting us here and to congratulate you on your anniversary. Now to your question. To be honest, for FinCap Securities, we didn't have to shift from traditional to digital. We actually started the business with tech as the underlying strategy. And I must say that perhaps we benefited from the COVID, because at the time when we obtained the license, we just entered 2020. So there was a COVID. So it was, perhaps it might have been a little easier to get clients to onboard with us because we were digital first. And for most of the other brokers, they were still, traditional in nature. So perhaps we might have benefited from that. But I would say that we've noticed quite a number of things. So for instance, our client base is largely youthful in nature. Maybe about 71%, if I have that correct, below the age of 40. We have majority of our clients, about 26% between 25 and 34. if we put it all together, we only have about 7% of our client base above the age of 45. So most of our client base is relatively young. The other key thing is trust. So at the onset, we struggled a little bit to get clients because the clients were used to physical structures. We do have an office, but in COVID times, nobody can actually visit your office, right? So there was a lot of trust building that we had to do first. And once that had been done, initially, I remember there were people who would call and they would ask, where's your office? Can we come to your office? Few people did come, but to be honest, our office rarely sees anybody walking. But we have clients from all over the country. We have clients in every region in Ghana. We actually have clients from 38 countries that are using digital platforms. So I would say that we didn't exactly experience a shift, but we, on the basis of the strategy that we deployed, we have been able to achieve our objectives, and our onboarding, execution, reporting, everything is done from our mobile app. Thank you.
Thank you so much for your experience on that. Back to Mr. Malauri, OBT Security CEO. As you are aware, OBT has been a key player in Tanzania capital markets for over 2 decades now. How technology have transformed your brokerage operations, particularly in shifting clients from traditional equity trading to more automated and digital investment platforms such as your Inuka Fund mobile app? Thank you.
Thank you, McLeod. Let me also congratulate my friend Peter and his team at the DSC, first for hosting this meeting, but also for celebrating the 30 years of the DSC. Congratulations. But it's also, as we celebrate 30 years, I think you cannot also ignore the role of my fellow brokers here. The growth of the market has been fundamentally also championed by the brokers, and I also need to recognize the presence of my fellow brokers in this room. Also, congratulations to you all for the effort that you've made to the achievement of the exchange. Yes, we came a long way at the market. I remember we came from the outcry method, trading, where all the brokers were convening at the exchange, trying to shout and trade. And I can tell you, Orbit was one of the first broker to do the first trading at the DSC by that time. And then we have moved to automated trading platform, where all the brokers were convening at the exchange in a small room, trading together in the room. And then we moved from that to trading on your own offices as brokers. Yeah? But that time, you can tell me, the clients used to come in our offices with a basket to come and collect their shares, thinking that I can go and buy shares and get a basket to come and collect the shares in the office of the brokers. So today, technology has fundamentally changed the way how we engage with our investors. In the past, it was paper-based, branch dependent, but also it was viewed, often seen as a business for services for few people, for the rich people. But now, technology has enabled us to take the market to the investors, where we see now the client, through their mobile, they can trade, they can buy stock, they can put order, they can access, they can open an account. They are being able to see their investment. So Orbit, as one of the key drivers in this market, as one of the longest broker in this market, 2 decades ago, the investment landscape here was, you just need to come to the office of the broker and you put an order and you buy the shares and you give you certificates and you go. Or if you want to sell your shares, you write a letter, you send from the region and send to us. We do that so that we can be able to put on your order to be sell your shares in the market. But now it's quite different. Technology has transformed us from that. So our role as Orbit Securities, our vision has been simple, to try and move all the barriers that prevents our clients from investing in the market. So how do we do that? Make sure that we have a platform that will enable the client to onboard, to open an account without any problem, but also to do online trading, mobile investing, and automate the customer service, automate the customer onboarding. If the client can do that, it's now very easy for them to access the market. This has helped us to reduce the cost, the time, and also the complexity of accessing investment product in the market. So Inuka mobile app, because Orbit was also the fund managers, we are running a fund called Inuka Fund. This fund is investing, we have two products, Inuka Money Market Fund, and we also have Inuka Dazani's Fund. So how do you access this product in the market? For us was to be first to create a mobile app that will enable the client to be able to open an account through that mobile app, but also to be able to invest in a small, with a small amount of money that he has, to invest in that through that mobile app. We can invest through with a small amount of around 10 shillings per investor. So that has enabled us to reach to different retail investors across the country. Anywhere where you are in Tanzania, you can be able to access our mobile app and be able to. So as we speak, our fund has almost 18 months, and as of today, it's around 65 billion shillings. And through the smartphone and the small amount of money, you can invest. So digital transformation is not just about building trust. It's not about just technology. It's about building trust and empowering investors. So at Orbit Securities, our philosophy is that at the heart of the strategies is to ensure that we combine digital innovation with investor education to make sure that the clients, the customer will respond to the investor education, responsive customer support, and nationwide financial literacy initiative. This effort means that we can educate the client, can understand on how through the mobile app can invest, can learn, but also can be able to monitor his portfolio within that mobile app. So that means that the accessibility of our investors has been enhanced, and the platform has been very simple to make sure that this investor is able to get to invest in all the products that are available in the market. You can invest in the shares, you can invest in the your bonds, you can invest in the unit trust that we have in the market. So brokerage business now is no longer about executing transactions. It's about now find a solution where an investor can have a way of getting the wealth management solution within the same mobile app or maybe a mobile platform. So when we have the broker can deliver that within the mobile app, he can trade, he can learn, he can have all the information. That's now be the role of the brokers to make sure we drive and we bring the investors in the market. So the investor needs to monitor their portfolio. They need to grow their wealth seamless without any problem. So with that, I think that has helped us to see how we bring more investors in the market, particularly retail investors. So thank you very much.
Thank you, Godfrey. Okay, back to Davis Kiado. I'm just referring to mobile trading platform for the DSE Hisaki Ganjani. We have seen this platform has successfully broken down traditional way of doing things, especially trading, investor onboarding. We have seen from the previous presenters has said more than 100,000 1,000 accounts for retail investors was onboarded. So my question is, what are the next major technological initiatives on horizon to further scale up infrastructure efficiency, as well as foster foreign institution and cross-border trading? Welcome, Davis, for that.
Thank you. First of all, greetings to all distinguished guests. Personally and specifically DSC, we are happy to see you, and we are happy that we show the willingness of coming together to solve the capital market problems across Africa and beyond. Yes, we as DSC have been driving the initiative, which we have branded as Hisa Ganjan, as a means of investors to invest through their mobile phones. Through digital transformation, we have been able to transform the way people have been accessing the market. The same thing has been said by many of us, but I would say Hisa Ganjan as a platform has profoundly transformed the DSC. And just to share with you a few metrics before I embark to another direction is, year 2026 itself, we have been able to remarkably record the performance of around fourfold of what we had last year. You can imagine. We had only 100 billions transactions that went through the digital platforms. But this year we are in the middle of the year. Imagine we have been able to register so remarkable performance of fourfold of what we had last year. So you can see the power of digital transformation, the way it has transformed the market, the way it is bringing the investors very close. And you have had the numbers as well. I think as we are going to close the year, we'll expect maybe to have at least 350 participants on the digital space. But when you look into the digital transformation, what it has given currently is access. We have been able to expand the access. Every investor or whoever wishes to invest can now have an access to the palm of their hands. That is actually the meaning of Hisa Kiganjani in Swahili. That Hisa, shares in the palm of your hands. So we have been able to solve the access problem. But I'm trying to address this in different direction. Yes, access is there, everyone can access, but my question or my thought that I have and I'll also share with you is, do we real sure that our people who we are targeting, do they understand the product we are offering? And I'm coming from the fact that capital market has, in most of the time, distinguished itself by using very intimidating technical jargons, which many of the citizens we target cannot understand. You can imagine the word like dividend, like price to book value, the earning ratio, and so on. They are very intimidating jargons where normal people will not understand. So our next move, we of course have a journey, but our next move is to see how we can make our markets becoming so intelligent to make sure that our investors can be served with a uplifted level of experience. We want to be in a level where someone who is speaking Yoruba from Nigeria or someone speaking Nyakyusa from there will be able to speak or to access, to communicate with the platform using his own language, so that we can just remove that barrier that we have now. People will have to make a decision based on how they are without forcing them to adapt to what capital markets require them to do. So with AI, or by building the intelligent capital market, means especially AI will be adapting the complexity of the market, and AI will just simplify the access to our people. So our next journey is to see how we can integrate the AI into our processes, not only from a customer perspective, but to make sure that we integrate AI in most of the processes that we have, which actually define the capital market as entire. Next is to see how we can have platforms that are connected and are connectable as well. We need to have a market that will be able to connect with other market. I think from yesterday, even other speakers have said, we need to have very strong and a large ecosystem so that we can have to realize the bigger value than going as a silos. So this can only be possible if our focus will be to build the API first capital markets. So our focus as DSE is to make sure that we make connected and very connectable platforms so that we'll be ready to connect with other markets, with other players like brokers, banks, commercial banks, settlement banks, and other fintech, so that we have a big ecosystem which allows transaction to flow very seamlessly. And I also argue to other fellow exchanges and other stakeholders here, connectivity should be a currency that we should give it a very strong attention, so that we together, because if as a DSE we can make connectable systems and others don't do, then it doesn't make any sense. So we need to have all together and take that as one of the very attentive currents. We need to give it attention so that we have connected markets. So this is the take, and this is how we think that we can elevate from where we are. We think we are in we are actually half of the battle, and we have a very long journey to move. Digital transformation has done its job, but we need to see how the emerging technologies, especially the AI and the API-based systems, so that we have we can have to unlock the market to the fullest. So this is our perspective from DSE, and I think, and I wish even others they're thinking the same way. So if we think together in the same way, we are pulling in the same direction, and our impact is going to be huge.
Okay, thank you, Davis. We are running short of time, but I will take one question for each, but please use only 2 minutes. Okay, starting with Rahab. We have seen adoption of AI has become essential for market integrity. So how is EGX viewing adoption of AI, as well as what are the challenges, roadblocks or infrastructure challenges that inhibit adoption of AI from your perspective?
In the Egyptian exchange, we have even gave it more importance to, so we have, in Egypt, we have a fully owned technology arm. We have a company that is fully owned by EGX, which is EGID, who are currently working on developing a dedicated and on-prem AI platform. So it's not going to be just the usage, it's a dedicated on-prem platform. It's about to launch by the end of 2026. So what we are, our vision in implementing the AI is to transform the market data into actionable insights to investors, enhance transparency, support decisions, investment decisions. We are also working on embedding the AI into the surveillance. And the opportunity is actually enormous. So we're also, one of the topics that they are working in is the AI, using AI in the investor relations in the companies. So all this we're hopefully to be covered in our project that's going to be launched by end of 2026. Thank you.
Okay, thank you. You have managed to save time. Okay, Gerfrey from FinCap. My question is, what digital tools have you used to attract retail investors, especially on young or Gen Z? We call Gen Z from our perspective. What tools have you used and which work better from your area to attract retail investors?
All right, thank you very much. I think mobile app in itself is the tool. I did mention before that the distribution of our client base is largely youthful. But I would say that perhaps maybe not a tool, but a strategy is screen first screen everything. So from your onboarding is on the screen. Young people have a strong affinity towards their screen. They will look towards their screen. So their portfolio should be visible from their screen. The ability to also move money should be swift. So their ability to fund their account, their ability to receive their dividends and coupons and so on should be swift. It should be go straight to their mobile money wallets or to their bank account. So I'll say that it's for them, I suppose, is largely convenience and everything screen.
Okay, thank you. Davis, Godfrey, I'll come back to you. Davis, given the rise in complex cybersecurity or threats across global financial landscape, how can African exchanges embed proactive threat hunting, penetration testing, as well as real-time data redundancy to guarantee continuous operational resilience?
Thank you. Fundamentally, cybersecurity is all about protecting the trust of the exchanges and capital market. When you look deeply into this, for our investors to invest in our market, they need to trust our markets, and cybersecurity is on the side of making sure that we protect the integrity of the market. Cybersecurity has got its two sides, the darkest side and also the other side. The darkest side is actually what is very intimidating, the ones which can wipe everything in a second. So we need to have strategies in place to make sure that we protect the trust and eventually protect the business. And cybersecurity actually is not merely a technology problem, but it is a business problem because it actually protects the whole business. So strategically, we need to have at least a framework which will have a way to prevent, a way to detect, and a way to recover in case we are in mess. But the most important part is the last part of resilience and recovering, where we are being measured on how we can bounce back in case we are knocked out by the cyber hunters, cybersecurity hunters. You can prevent, you can detect, but no one here can guarantee that nobody will be attacked. So the most important part that we need to put our investment, and I'm happy from Rehab, who has said EGX have beefed up their budget up to 40%, I think, this year, which you see how they have saw that they are so much vigilant on how they should protect their market. So I mean, what I'm saying here is on the currents of resilience is where we need to put our eyes, because we cannot assure that we cannot be attacked. So we should invest much on how we can get back when we are in mess. So this is a thought, a take that I can share with the audience here.
Okay, thank you, Davis. Back to Godfrey. You have a lot of strategies, partnership. You have engaged with the sports clubs, big clubs like Younger Africa and other partners, including your funds and so on. But we have seen market participation remain low. I want to understand from your area, what are the digital innovations or solutions you think if will be applied or adopted, maybe they will try to convince some of these retail investors, even the big investors, and cultivate culture of saving on a daily basis in terms of investing in long-term securities?
Thank you. I would say the biggest challenge in Africa, or the biggest challenge in our market, is not about money. It's the lack of awareness, access, and confidence. In Africa, or in our market, is people do save in mobile money, in groups, saving groups, in informal networks. But now, this few of these transition into an investment product. So now the biggest challenges, or the biggest opportunities, how do we connect these savings to long-term investment or to investment. This is where the opportunity is for the brokers, for the market to see how do we channel the people who are saving in the mobile money, in the former groups, former networks, to be able to channel this investment, saving into investment. As a brokers, I think it's key for us now to start talking of the integration among this mobile money, mobile operators, the banks, circles, to see how we can channel this investment, this saving to the investment. So as Orbit, as a brokers, I think it's our role through our own mobile app. How do we integrate with the mobile money? The DSC has done a very good job to bring together the mobile operators in the market, the banks. So this provides an avenue for us to be able to access their client, retail investors. So through our own innovative digital platform and through integrating those digital platform and having investment solutions will enable us to bring more investors to the market, to be able to access this saving. So we have started talking to different institutions, to the banks, to connect so that we can harness, can bring those lying idle funds in the saving to be able to be invested in the capital market. So the opportunity is there, but how do we do it? Is to have to go through digital platform. So for us, when we were launching our Inuka Money Market Fund, we partnered with younger communities. So if you partner with such kind of communities which is familiar to the societies, and we have a mobile solution, it's become easier for you to be able to bring them on board. So to bring them because it's simple for them to use the platform to invest, because it's also the club is well known, is very well trusted. So if you have a proper platform where they can access the investment, and actually it brought us a number of retail investors. As we speak today, we have more than 30,000 retail investors investing in our fund. It's not within 1 year and a half. So the more we try to connect, to integrate to this formal group, the banks, the mobile app, I think we'll be able to reach to a number of investors in the market and bring them to the capital market. Thank you.
Thank you. This is the end from our side. If there is any burning from the floor. Someone who want to speak in relation to this? One. I have 2 minutes. No one? Is it? No one? Okay. MC, thank you.
So it's either we understood well or we didn't understand anything. Can we have another round of applause, please? Thank you very much. Can we have a picture of the panelists, the photographers? Picture of the moderator and the panelists. Thank you very much for a well-spoken topic. Smile. Give us a digital smile. Thank you very much. A bigger round of applause, please, to the moderator and the panelists. All right, so the challenges of digital transformation in market access, the way we talk about them, mainly we are also talking about the urban areas. What about the rural areas, the places where we really come from, where they are fans of younger, but they don't have the digital abilities to do that. So I think that is something that we can touch upon as we go further. So right now we are going for a very short health break. If you are following up on our schedule, our program, you'll see that we are a few minutes late because we're trying to be transformed digitally as well. We're not trying to go on African time. So today we're trying to be on time. So we are going to have the 10 minutes for the health break. My advice, so that we can be back here on time, instead of coming out with the bell like yesterday, if you need to have some coffee, if you need to have something outside, please, we can all go together. And then if you have something that you think will take longer for you to take, you can just come back with it here, as some of us have already started doing. So we have 10 minutes. If you don't need to go, you just need to stretch or head to the restrooms, then please take the 10 minutes and please be back here on time. So 10 minutes starts now. We can all go to have some coffee and some bites, and then let's be here in 10 minutes. Thank you. So it's 10:35, 10:45, we start. 10:45, we start. All right, let's settle down. Let's settle down so that we can proceed. Let's settle down. Let's take our seats so we can proceed. All right. So in the following sessions, I believe everyone has enjoyed the break. As predicted, it took 10 more minutes, but I believe it was sufficient for our health. So can we settle down? Thank you. All right, so later on, we're going to have technical presentations on financing of SMEs. We're going to have presentation by our technology partner, and then we'll also have another presentation on ESG and sustainable finance. But for now, we have our sponsors here, and we would love to hear from our platinum sponsors. We heard a little bit about them yesterday, and they have something else that they wish to tell us today. So in the next 10 minutes, we'll have the two platinum sponsors come to speak to us. First and foremost, please help me welcome the Senior Manager, Stock Brokerage and Advisor from CRDB Bank PLC, Mr. Imani Muhingo, to tell us about CRDB Bank PLC. Can we have a clap of hands, please? Clap our hands for Mr. Muhingo, and let's lend him our ears. Welcome, sir.
Your Excellencies, distinguished delegates and fellow practitioners, good morning. So yesterday we heard from our head of capital markets from CRDB, and it was a famous speech. We heard how CRDB is a stakeholder with capital markets and holds a stake in this market. But today I want to speak about something larger than any one institution. Who gets to participate in African capital markets and who is still waiting at the door? Let me begin by acknowledging how far this market has come, because it has not come this far by accident. In the last few years, the Dar es Salaam Stock Exchange and CMSA have quietly transformed the architecture of participation in Tanzania. Our market capitalization grew from $6 billion in 2020 to $13 billion as of now. That is more than double in just a span of 5 years. An investor today can open an account and trade from a mobile phone, something unthinkable just a decade ago. We heard about digital transformation just a while ago here from the panel that went on early on today. Investor education now reaches schoolgirls in Dodoma and traders at Sabasaba grounds, not just fund managers in boardrooms. DSC and CMSA ongereni sana. But stakeholders, a doorway is only useful if there's something worth walking in for. And here is the honest conversation. Our shelf has very few products. An ordinary Tanzanian who walks in our market today finds the same equities similar to 2018. Tanzania has not seen a major IPO since Vodacom back in 2017, nearly a decade ago. And we are not alone. Kenya went more than 10 years without a single IPO, and across the continent, exchanges have grown in value but not in variety. Think about what that means for inclusion. We are telling a young Tanzanian, come invest. And when she arrives, we offer the same menu her father saw. So where will the new products come from? I personally believe it's state-owned enterprises and small and medium enterprises. In January, Kenya listed the Kenya Pipeline, offering the largest IPO in East Africa's history. In May, Ethio Telecom became the first state enterprise on Ethiopia brand new exchange, and its earlier undersubscription taught us an equally valuable lesson. SOE listings succeed only when preparation, pricing, and public confidence is in place. As market players, we need to work on preparation and pricing, because we see in Tanzania public confidence is already in place. Tanzania knows this playbook very well. We have seen Twiga Cement, TCC, TBL, Swissport, and Tanga Cement, and other SOEs that have listed on the exchange. And we have seen how they've come to be significant players in their sectors and significant players in the capital markets. These SOE listings created wealth for hundreds of thousands of ordinary citizens. Our state-owned enterprises in energy, logistics, and financial sector are the crown jewels sitting outside the display case. Bringing even 2 or 3 of them to this exchange would do more for inclusion in 1 year than a decade of seminars. And apart from SOEs, SMEs is another frontier. And here I must also commend efforts done by CMSA and DSC for building what I call a ladder for our SMEs. The enterprise growth market window, which lowered the wall for growing companies to list on the exchange. The DEEP and Endeleza programs, which take SMEs and teach them governance and investor readiness. And the new venture capital and private equity regulations and crowdfunding regulations, which means a Tanzanian startup no longer has to choose between a bank loan and nothing. While listing is an exit mechanism for private equity and venture capital investments into SMEs, can be facilitated through the EGM window. So from crowdfunding to private capital to Endeleza to EGM to the main board, that is a ladder for SMEs. Our job as brokers and advisors is to put companies on the first rung. And finally, the African Exchange Linkage Project. Colleagues, the AELP already connects 7 exchanges representing over 90% of the continent's market capitalization, with Tanzania onboarding in phase 2. Understand what this means for the young investor I described. The day we are fully linked, her bare shelf becomes a continental supermarket. Over 1,000 listed companies accessible through her local broker from Casablanca to Johannesburg. That is the ultimate inclusion. An African investor treated as a neighbor in every African market, not a foreigner. Additionally, any African will be a part of SOE listing and SME ladder happening anywhere in Africa. Anything we can do to fast track the ELP should be among our top priorities. CRDB's commitment into this. CRDB stands ready to support with our balance sheet, our brokerage, our advisory practice, and our people. Every initiative spoken of within this engagement, any initiative that advances the development of capital markets, CRDB is ready to support. If any SOE comes to market, we'll be there to structure, distribute, and to bring the retail investor along. If an SME steps into Endeleza ladder, old bladder, our advisory team will walk beside it, rung by rung, and when Tanzania connects to the ALP link, CRDB intends to be among the first brokers trading across African exchanges. But our, yes, please. But our commitment does not stop at our borders, because Africa's capital gap is not closed by African savings alone. CRDB today operates a representative office in Dubai, the first East African bank to do so, deliberately positioned as one of the world's busiest crossroads of capital. We are placing that office at the service of this agenda. As a bridge between Gulf and international investors and African opportunities, channeling funds into our IPOs, our bonds and green instruments, and our markets. When the Kenya pipelines and Ethio telecoms of tomorrow come to market, and when Tanzania's own crown jewels take the turn, we want the order books to carry names from Dubai and beyond, alongside the school teacher from Dodoma. That is our pledge: local hands opening the door and global capital markets walking through. So here is my summary. The doorway is built, now let us fill the room. More products on the shelf, our SOEs on the board, our SMEs on the ladder, our markets linked as one, and CRDB standing with you from Dar es Salaam to Dubai every step of the way. Asanteni sana.
Another hand of applause for CRDB. Thank you very much, Mr. Imani. You have spent exactly the time that I gave you. Although if it was up to me, I would just tell you to read the summary. But thank you very much, not just for that speech and that information, but also for being our platinum sponsor. And now we also have the privilege of having another platinum sponsor. This is Kado Securities Limited, and we have the CEO, Mr. Justin Amos. Can we give him a hand as he comes to the stage? A bigger round of applause, please. A bigger round of applause.
Thank you, moderator. Ladies and gents, good mornings. So yesterday I stand here before you. I spoke about innovation, regional integrations, and financial inclusion. And today I would like to focus really on one word: executions. Because I believe without execution, those words may not be reality. I believe Africa does not lack ideas. We do not lack opportunities, funds, or anything rather than executions. If we have problem, it's executions. At Kado Securities, we have built our business on belief that we do not wait for the opportunities. We go for them. We move quick, we innovate boldly, we bring investment opportunities closer to ordinary citizens so that they can invest. And you might see the results for yourself. In just 15 months of operation, we have managed to open and manage 30,000 CDS, which these CDS bring us to third brokers in Tanzania in terms of turnover for the past 2 quarters consecutively. With no institutional investor, with no funds we manage, only retailers and high net worth individual. This achievement proves that future of Africa capital markets do not really rely on institutional investors and fund managers only, but retailers also. Our motto is very simple: tupo ulipo, wekeza popote ulipo. Means in Swahili, we are where you are, invest wherever you are. We follow people where they are. We go to churches, mosques, night clubs, music concerts, football matches. Everywhere people are, we follow them, preach the gospel about invest. We hope they invest. Because at the end, we believe success loves speed. So the takeaway for you all here is let's execute our ideas, let's execute our strategies as fast as possible. Let's reduce the time between having idea and getting things done. Thank you.
Another one for Kadoo Securities, please. Another one. Yes, thank you. The speakers from CRDB and Kadoo Securities for not just talking about your company, but making sure that we are inspired as well. Now, do we say an axe, when you want to cut a tree, do you cut a tree with an axe, or is it an axe that cuts the tree, or the person that cuts the tree? What? Ni shoka au ni mtu? What cuts the tree? Oh, who cuts the tree? The person, right? The person, right? So there's someone that believes technology alone doesn't transform markets. It's the people that transform markets. We here are the people. And this is none other than the speaker of our next topic, which is on financing of SME startups through the capital markets financing ecosystem. Can we give it up to the CEO of Escrow Group, Mr. Colin Tapfumeneye, for his presentation, please. A bigger round of applause, a bigger round of applause.
Thank you very much, and good morning, ladies and gentlemen. Once again, I would like to appreciate the opportunity given to me by the organizers, Dar es Salaam Stock Exchange, and congratulate Dar es Salaam Stock Exchange for arranging this wonderful event, as well as achieving 30 years of success. Ladies and gentlemen, I've spent quite a fair amount of time in the capital markets. There is something very interesting that I've learned, and I feel I could share. I've learned that entrepreneurs, most of them spend a lot of time during their life looking for capital. Investors spend a lot of time looking for opportunities. Capital markets, stock exchanges spend their entire life waiting for entrepreneurs to come to the market, and we all wait. One would think the solution is just to connect the three, but that has proven to be the hardest task. Ladies and gentlemen, our attempt to share a presentation on how we could collectively ensure that that connection, connecting those dots, should not be as hard as we seem to all make it. I'm going to have a twofold presentation, discuss about the financing solutions for SMEs, also at the same time share with you the partnership that we have entered between Escrow Group and Dar es Salaam Stock Exchange. So as we all know, in Africa, the reality is 90% of our businesses are SMEs. Sometimes it's a very hard one to say because it's a thriving business doing well, but you categorize it as an SME. But that's the reality. 80% of jobs, if you look around in almost, I think in Africa, we have common economic conditions, 80% employed through SMEs, and they contribute 55% to the GDPs. So, big question. If we are capital markets that are not in that space, what is our relevance in the economic development of our countries. Even more profound, the funding gap for SMEs, 331 billion US dollars. That's what collectively SMEs are looking for. What is the role of a stock exchange? What should a stock exchange be known for? What should capital markets be known for? A lot of people associate capital markets with trading of stocks. But is that correct? Is that how we want capital markets to be perceived by our people? As capital markets, as stock markets, if we were to go out in Dar es Salaam and ask entrepreneurs out there, where should you go and get capital? They will think about friends and family. They will think about their savings. They will think about banks. I have not done the research, but I'm very sure if we go out there, 9 out of 10 will not mention the stock exchange as a source of raising capital. And that's an issue that we really need to face. Is it even 9 out of 10? Maybe 10 out of 10. None of the small businesses will tell you, if I need capital, I could go to the stock exchange. Why is that a problem? So we have the SME side challenges, some perceived, some real. So financial records, governance structures, limited visibility, lack of advisory support, you name it. But on the capital market side, we are looking at us exchanges waiting for the right enterprise to come to us. We throw the rule books at them, meet these requirements, and you can raise funding. Our investors, we focus a lot on quality investors, high quality institutional investors. But what is their perception in terms of the risk associated with SMEs? Is that the only investor base that we can look at to propel our capital markets? Our instruments themselves, are they tailored? Are they suitable for the SMEs? So those, on the two sides, we have those perceived and real barriers. So a solution is needed. I think I've attended many conferences, we've met as exchanges many times, and we're always agreed we need to do something about SMEs, year in, year out. But how do we solve this? So we need a solution that ensures a coordinated market building exercise. So let's look at all the sides. Number one, the saving side. I think millions of our people have the appetite. We're talking about risk. So most of our traditional investors, they already have perception in terms of the risk associated with investing into small businesses. But what about our people, those who are saving? One thing I have observed is that our people actually can tolerate risk. Just open a betting shop somewhere. People are prepared to lose money. And when they lose money today, tomorrow they come back again. They are looking for investment opportunities. We are not giving them the investment opportunities. That's why they are going to betting houses. Why don't we structure investment products that harvest that liquidity that is going into betting? If we look at enterprises, we need to have a solution that enables their onboarding to be seamless, to be painless, and to give them confidence. And then we need to also have digital automated intermediation in the middle. Why do I say this? Our advisors, they might consider that advising or packaging an SME for capital raising that requires $100,000 is as costly to them as raising 5 million, because there are certain minimum activities that they have to undertake. So we need to use digital tools to reduce that cost that leads to them having a negative perception of advising SMEs. So how would the digital solutions address this challenge? Firstly, we've talked about the challenges that we face, but let's look at the solutions. How about creating a digital marketplace that connects SMEs with investors across local and regional markets? AI has come in full force. Why can't we as exchanges adopt that to reduce the costs? Automated onboarding. An SME shouldn't, the promoter shouldn't travel to Dar es Salaam to talk to owners of capital. They should do it from wherever they are. We need to incorporate retail, both retail, institutional, diaspora, mobilize those resources. We need to have a mechanism to support packaging of specific instruments that speak to SMEs. So as escrow, we have come up with an all-encompassing platform that looks at simplifying this seemingly very complex situation. Firstly, to have a digital platform that ensures digital registrations, AI-based screening and scoring, valuations that are actually AI-driven. So the SME just put down their story on the platform, and it does what we call initial desktop valuation. By the time you are bringing an advisor, you are just then telling them, I've already done the origination for you. I've already done initial valuation for you. I've already done initial screening for you. Therefore, that issue of this being a very expensive and costly process goes away because technology has done all the heavy lifting. Then you then do your ongoing maintenance and disclosures. Disclosures are also some of the problems that we face. When you are now require the SME to continuously disclose, why don't we automate that? Disclose it by harvesting their transactions. Transactions are now very digital. They work with banks, they work with mobile network operators. Harvest that information for appropriate disclosures for investor confidence. So the digitalization of the SME funding, we've just looked at it in 3 steps. First is the discovery. So we've talked about thousands, hundreds of thousands of SMEs, perhaps millions of SMEs. How do you separate between the good quality ones and the rest? Again, that's the discovery process. Automate that discovery process, make it seamless, make it automatic. Once you have done the discovery, the platform should now enable the exchange infrastructure to ensure the SME, the investment readiness is done automatically. That is where we are then looking at even automated production of information memorandum. This can be done through technology engines. We then move on to capital raising. The automated intermediation and financing is a crucial part. So we are now looking at the intermediation, financial advisors, auditors, and a whole lot of intermediation work that should be done. Provide the advisors and the experts with tools and with the digital tools driven by the exchange for the advisors to just now put the human touch after the technology has done the work. Then eventually we go to the financiers, and the financiers, all they want is to see a good sanitized pipeline, all within one big digital ecosystem. A case in point is the project that we have come up with the Dar es Salaam Stock Exchange. It's called Endeleza. So the Endeleza project initiative brings to the fore the platform that we have talked about, launched this last first quarter of 2026, and it's an SME funding platform which connects SMEs with a wide range of financiers, provides a secure, structured, and tech-driven ecosystem, and it acts as a bridge between capital seekers and capital providers, and the traffic has started coming through, and I think the DSC colleagues will tell you at an appropriate time the progress that we have made so far. The ecosystem or the concept I've talked about Endeleza, we call it Gem Portal in Zimbabwe at FinSec, which is the Financial Securities Exchange, and we are also in partnership with Nairobi Securities Exchange, and it has been branded NSE Connect. So, what does the future hold? So, beyond just digital onboarding, we are looking at a scenario where stock exchanges, securities exchanges, should embrace digital finance tools to have a kind of a digital exchange powered by AI, bring in tokenization. Tokenization enables SMEs that would have been high-risk SMEs to be de-risked, because if they have real-world assets, use that as collateral, use that as a means of securitizing instruments facing SMEs, facilitate borderless investment, and ensure we have inclusive capital formation. Let's also look at going beyond the traditional instruments, equities, loans, private placements, receivables finance, and start going into SME-friendly instruments, looking at tokenized SME bonds, tokenized commercial paper, revenue shared notes, invoice-backed notes, receivables notes. What I've discovered is that SMEs find it harder to come to the equity play too early, because they fear dilution, family-owned businesses, but what they like most is debt. Create instruments that enable them to access debt capital, starting with short-term debt capital. I know there's always a tug of war between banking and capital markets, but through innovation, through securitizing some of the instruments, address the debt issue short-term, then go to medium-term, long-term debt. By the time you go to year 2, year 3, you now have a very good pipeline for potential quality listings, because you have now demystified capital markets to the SME. You have not thrown to them a rule book that requires them to disclose how much the directors are being paid, who are the founders, and they are not ready for that. But once they know that they can get access to short-term debt, medium-term debt, long-term, eventually you then say, by the way, you need better machinery, you need better equipment, and you are now ready for equity listing. That conversation becomes easier than doing that day one. And all that backed by modern technology will enable capital markets to be a lot more relevant than they are today. Thank you, ladies and gentlemen.
Thank you very much, Colin, for the insights that you have just shared. And I think with that round of applause, we concur probably 98%, if not 99.9% of your sentiments. Naomba tumuongezee makofi tafadhali. Ladies and gentlemen, we will love to continue diving in on the business of the day regarding technology. And I would love to welcome on the stage the sharp gentleman, Mr. Zach himself, who is STT Director. A big round of applause, tafadhali, for Mr. Zach.
Good morning. It's a pleasure to be here today. Thank you very much to the DSE for organizing the event, and Okay, thank you. Awesome, thank you. It's a real pleasure to, so I represent STT. For those of you who don't know me, my name is Zach Hodgson. I'm the Managing Director of STT Mauritius, part of the STT group. So we are proud sponsors of this event. Thank you. We're also proud suppliers to the DSE. We're also proud suppliers to a lot of the exchanges represented in this room. I'm not going to talk too much about STT and the products because I know that can be, you know, not super interesting. So I thought I would use the opportunity to talk about something different, some market trends, talk about what's happening globally in the world, and maybe talk about an opportunity that I think is something that we haven't really talked about in the last couple of days, that people haven't really mentioned, and that I think is worth at least thinking about. So if at the end of today, you know, I've planted a seed for some conversations to happen, then that would be fantastic. And that opportunity, I think, is related to stablecoin and how that could potentially solve one of the biggest problems that we have in Africa. So I know Colin just came just before me and talked about tokenization, and I might say a few things that disagree with him. That's why I haven't shaved in 2 weeks, so that if you don't like what I have to say, I can shave tonight and disappear tomorrow. So for those of you who don't know STT, very briefly, we're a capital market solution provider. We sell software to exchanges, all stakeholders within the exchange ecosystem. So markets, matching engines, CSDs, broker trading front ends, market surveillance, you name it. Proud suppliers to a lot of exchanges. So if any of you are interested, please go to our website, come see me after. It will be a pleasure to meet and chat with you. So what's happening with tokenization? I've been at quite a few of these conferences in the last 10 years. If you recall, I'm sure a lot of you recall, that 10 years ago or 8 years ago, Bitcoin was exploding. Every conference was about tokenization, right? Blockchain. If you weren't going to tokenize, you were going to disappear. CSDs were going to become obsolete. That was the thing, right? And we don't really talk about it that much as we used to. Not saying that it's not relevant, not saying that it's not part of our future, but tokenization hasn't gained the foothold that we necessarily thought it would in today's markets. And that's because potentially when it comes to traditional asset classes or what you guys are trading on your markets, it doesn't really solve a problem that we have, does it? It might solve a problem for other asset classes, real world assets, SME assets, private assets, might solve a lot of problems. But in terms of what we're currently trading on our markets, well, it hasn't really gained that foothold. Even though there's a lot of projects to tokenize assets, NASDAQ is looking at their own digital asset exchange. We've got a lot of real estate projects in Dubai. There's a lot of projects to tokenize, but it hasn't really gained a foothold. And then, so let me take a step back and give you a perspective. So what is the most traded asset class globally today, right? It remains Forex. Don't hold the numbers to heart. The idea is to just give you an idea of trends. I can't guarantee that the numbers are accurate, but they give an idea of what we're working with. So about $10 trillion a day in FX. Then we're looking at securities and debt instruments. Interest rate derivatives, $8 trillion a day globally. Global equities, $1 trillion plus a day. Okay? Consequent numbers. Then what are we looking at? Tokenized securities. We just saw $1 trillion a day of global equity trades, which adds up to about $250 plus trillion in 2025. Tokenized equities was 10 billion in the entire year. Tiny little bit. really barely making a dent at this stage, right? Not as relevant as we thought it would become. Not saying again that it's not going to be, but it hasn't gained the foothold that we thought it would have in the last 10 years. So if we compare across all asset classes, FX 10 trillion, as I said, debt is 1 to 2 trillion, that's not counting interest rate derivatives. Equities, $1 trillion. Tokenized securities, way down, $150 million. Irrelevant on the global scale at this stage. But well, what I'm coming to is crypto and stable coins, and particularly stable coins, have started gaining a lot of traction. Yes, if we look at relevant to traditional markets, it's still small, right? $76 billion in stable coins were traded in, well, a day were traded. This, I think this is in April 2025. It's grown since. But when we look at growth, right, this is what's interesting. In growth terms, crypto has outstripped traditional asset classes by a mile. 1,800 times in the last 10 years, with crypto derivatives 60,000 times. And crypto derivatives is a different animal. Risk management, prediction markets, all of that is driving crypto. But part of that crypto is stable coins. Now, in Africa, we have a very big problem, and that is cross-border settlement. You guys talked about it yesterday in different panels. The AELP, Lena, talking about how that's one of the biggest issues with AELP, and to drive growth is the cross-border settlement. So why don't we look at, why are we looking at traditional banking systems to do cross-border settlement? Why don't we look at new technology? So if we look at crypto or stable coins, and this is combined, this is just an interesting stat. US equities traded in a 1-year span from July 2024 to June 2025 was $277 trillion. With $2 trillion in crypto, that's less than 1%. Okay? American markets are very efficient. Crypto is used as just another vehicle for investment. It's not really used for moving money or doing things that we have to do in Africa. If we look at Africa, African equities traded value in 2024, 2025 was approximately 240 billion. Might be wrong, but give or take approximately $240 billion worth. Whereas crypto transactions recorded on chain in sub-Saharan Africa alone was 205 billion. Almost as much as our equity trading. So what does this mean? Well, this means that obviously crypto is being adopted in Africa. Stable coins are being adopted in Africa. Okay, there's a trust. People need to solve a problem that they're solving with crypto. It also means that there's a huge untapped market, and you guys have mentioned it, retail market, that is currently hungry for investment, hungry for diversification. And they're doing that through crypto because they can't access our capital markets. And I know you guys are doing, the ALP, SADC, EAC, there's a bunch of integration, regional integration projects which are wonderful. And I can commend them with their efforts. But they all have the same problem, which is cross-regional integration. So crypto, if we look at growth, stablecoins outstripping crypto by a long mile. Almost 50% of crypto transactions in Africa are stablecoins. Access to investment, external currencies, low friction settlement, you name it. That's why stablecoins are so popular. So why not look at stablecoins? And this is, at the end of the day, I'm just trying to plant a seed or create some discussion about one of the biggest problems we have. Why not solve it with stablecoins? Sorry. So currently, you want to trade offshore. You're a local investor, you sign up with a broker, even through AELP, who signs you up with a foreign investor. You have to do a bank transfer from your local currency. You have to do an FX conversion, get sent overseas to the offshore broker. He doesn't place your order until he receives your funds. You see an opportunity, it takes you 2-3 days to get the money that side for him to actually trade for you. It's slow. And it's understandable that it's causing friction. There's so much opportunity if you look at growth. Dar es Salaam, Kenya, NSE, record trading volumes, Ghana, Zimbabwe, Botswana, record trading volumes because they're tapping into their local retail market because they can access their markets easily, but they can't access international markets easily. But with stable coins, maybe something worth considering. Because if you use a local stablecoin provider, he takes your local currency, and I'm not saying that any of you markets need to suddenly trade in stablecoin. I'm not telling you to change. You take your local currency, you convert it to stablecoin, you send it offshore to the offshore CSD, receives that stablecoin, converts it back to local currency. Exchange rates handled through APIs, settlement. You see an opportunity now, I can have my funds overseas within seconds, not days. And you might say, well, do we have to integrate now with stablecoin provider? Do we have to integrate with blockchain? How do we do this? Case in point, how stablecoins are becoming more and more adopted in Africa. All of these companies now provide stablecoin payment rails. Yellow Card, I'm sure a lot of you have heard of them, very big in Africa. And all they do is provide B2B payments. They take your local currency, convert it to stable coins, transfer it, and convert it back. BVNK, some of you might have heard, they were bought by MasterCard for $2 billion. MasterCard is using stablecoin payments globally now to transfer money across borders. All of these companies offer a solution. So all I'm saying is it's becoming mainstream. The use of stable coins to perform cross-border settlement is becoming mainstream. So why not look into that? Maybe we should look into that as African markets. How do we harmonize our integration and solve our cross-border settlement with stable coins? Using our assets remain the same, our trading currencies remain the same, but settlement becomes seamless. Not on here. Last night I saw there was Ripple. Some of you might know Ripple. They announced that they bought a African company that's present in 35 African countries to provide their RLUSD, which is a new stable coin called Ripple USD, across in 35 countries in Africa, becoming mainstream. So in short, we could use this method, potentially something worth investigating, and yeah, that's me. Thank you very much.
A big round of applause for Zach, please. Thank you very much for those insights, and I like the way you handle the pressure of time. In Tanzania, there is an end and there is a completely end. Mwisho afu kuna mwisho kabisa. Sasa mheshimiwa hajachomekea mwisho kabisa. So we really appreciate. Another round of applause, tafadhali. Before we proceed, we would love to acknowledge once again our sponsors. And if you get bored by this acknowledgement, wait until they don't show up. If they don't show up, then the bill becomes extremely high. So it's very important that we acknowledge them. And sponsorship is all about recognition and visibility, and we respect that. and I think they deserve to be recognized. Once again, ladies and gentlemen, I would love to mention and to acknowledge our sponsors. Platinum, we have Kado Securities, who early had the privilege to be on the stage and showcase or their profile. Then we have CRDB Bank PLC, and gold sponsors, we have Infotech Group, Stanbic Bank, Orbit Securities, UTT Amis, NBC Bank Tanzania, NMB PLC, NMB Bank, and on the silver package, we have Solomon Stockbrokers, Zan Securities, iTrust Finance Limited, and I see Professor Sam is here already, who is going to share his paper very shortly. We have also Victory Finance PLC, Global Alpha Capital Limited, National Social Security Fund, STT Technologies, where Mr. Zach is from, and International Finance Corporation. Oh, so Victoria Finance PLC, we have been mispronouncing their brand, and we truly apologize for that. Please don't bring the demand notice on the brand issues, but we really appreciate. So now, ladies and gentlemen, after those remarks, I would love to welcome on the stage another presentation, which is going to be a case study. And the title for this case study is ETF Markets Trends in Tanzania and other part of the continent, African continent. And the one to do so is not the other, but the famous Professor Muhammad Warisami, Director of iTrust Finance, one of our sponsors. Karibu sana, Professor. A big round of applause, ladies and gentlemen.
Good morning, everyone. Thank you very much. I would like to extend my gratitude to be invited to present and speak about the trends around ETFs within Tanzania and outside Tanzania, within the African continent. I do have a presentation which will be put up soon. Just to give you a history, ETFs are not new to the East Africa region. They were cross-listed ETFs, particularly the gold ETF in Nairobi Stock Exchange. So that came in through APSA's ETF, New Gold in South Africa. And then in Tanzania, there was also an ETF launched here which dealt with financial institutions, done by one of our brokers here in Tanzania, Vertex. That's an ETF that also was launched in Tanzania. At about the same time, but second in line, came in the particular ETF which I'm going to use as a case study here, which is the East African ETF. So ETFs are starting to penetrate the region, and this is some trend that I think is worth noting and taking into consideration. I know that one of the challenges mentioned by the speaker before me was the issue of payment rails. How do you settle cross-border? How do you be able to move money around? Those are some of the challenges we dealt with when we did this particular East African ETF. Yeah. Okay. I don't have a way to control the slides, so we'll have to. Oh, great. All right. So the ETFs are quite common. Before I mention what an ETF is, just to give you a sense of how common they are globally, you can see here some of the stats. over 17,000 ETFs. Many of them have multiple listings. They're listed on different stock exchanges, so they're cross-listed technically. And then they're listed in many countries, across many geographies and stock exchanges. The ETFs are a phenomenal explosion for the last 15 to 20 years. I think the AUMs of ETFs around the world have exceeded 23 trillion. You know, just to put it in context, 23 trillion is like Chinese GDP, you know, probably a little bit more than that. But it's a significant amount of funds in ETFs that investors have used. There's a reason why ETFs have become so popular around the world. They give you access to every major asset class. You're talking about everything from geographies, sectors, you know, equities, all the way to commodities and bonds. So every kind of asset class is available through ETFs. But if you look at the African continent by itself, we do have many ETFs, but significant number of these ETFs are actually there basically to be feeder funds for S&P 500, feeder funds for MSCI index ETF providers. They're really not indigenous. The biggest operator in Africa, Satrex in South Africa, really dominates the African ETF landscape. So for example, the Satrex 40, which is the 40 largest companies on the Johannesburg Stock Exchange, is really by far the biggest. And New Gold, which does the gold ETF and listed it in multiple African countries all the way to Ghana, Kenya, Mauritius, you know, a couple of other SADC countries, that is also really, really massive. So those are some of the things, but if you look at the market cap, 18 billion. Now that's a big difference between 23 trillion global capital in ETFs to just 18 billion. And most of this 18 billion, I assure you, is actually feeder funds. They're there for people to get access to S&P 500, for example. So Africa is way behind. We are truly underdeveloped when it comes to ETFs. We are at a very, very, very early stage. Even though the product itself is mature globally, in Africa, we are extremely early stage. So what is the advantage? There are a couple of things I want to point out that are very important to this forum. Retail access. For the first time, ETFs gives everyone access to a diversified portfolio of equities that are cross-border, for example, in the particular case of the EAC ETF. So small investors can get diversified portfolios by using ETFs. Secondly, market liquidity. ETFs help the trading structure of the market. Once the ETFs trade in the market, everybody can be able to trade them. And I'll give you a simple example. When the EAC ETF started, the IPO level, it had 4,500 investors. Immediately after listing, it went from 4,500 to over 12,000. So people were able to access it through any brokerage they had. So all the brokers in the market can participate. As ETFs grow, they provide trading volume across the market, across the board. They add up, because the ETF being a layer that owns diversified portfolio, that means there is trading also underneath among the equity instruments that make up that particular ETF. So there is activity. It makes the market much more dynamic. Secondly, obviously, in a particular case of cross-border ETF like the EAC, it provides regional integration. For the first time, you can buy one particular ETF and be able to own stocks across multiple borders without having to open multiple accounts, multiple bank accounts, multiple custody accounts, multiple brokerage accounts. You are able to just buy all of it in one package, in one ETF. Secondly, I think lower cost. Obviously, the cost of ETFs is much, much lower. Even though it's cross-border, it is actually half the cost in terms of management fee compared to, let's say, a unit trust or a mutual fund in Tanzania, for example. And then, of course, institutions can use it at scale. It is able to expand the number of units. It's able to give them quick access into the market. Before assembling illiquid stocks out there, you can get access directly straight into the ETF itself. And of course, before forgetting, financial inclusion. As you all know, in Tanzania, we are extremely, extremely interested in financial inclusion. How do we bring more people into our markets, into our capital markets, and provide them investment opportunities? So financial inclusion is the other part. It can be distributed in any platform, It trades on all the platforms, including the Dar es Salaam Stock Exchange's Kiganjani app. Those are all distribution platform for it. So let me back up a second and just explain briefly what an ETF is. Basically, an ETF is a mutual fund that transacts or trades its units on the exchange. That may sound very simple. You take a normal fund, you take the units, instead of people transacting directly with the fund manager, you go and transact on the exchange. You buy and sell to other investors on the exchange. This provides a new layer of liquidity in the market because investors are now don't have to subscribe or redeem with the manager. They can go straight to the exchange and buy and sell to each other. So what is the complexity? With DSE and particularly CSDR, we had to solve a couple of challenges. One of the challenges that now is quite solved, in our case in Tanzania, was how ETFs actually work. So the way an ETF will work is the manager who promotes it or the fund itself will be buying securities, and when they get securities, usually they receive the securities in what we call in-kind, which requires CSDRs to be transferring shares from, let's say, what we call authorized participant over to the fund. Now that structure is new, and that is what actually makes ETFs work, and I will explain that in a second. But as far as ETFs are concerned, they are a pooled funding of investors into a fund that is able to buy now whatever diversified portfolio of assets are required. That could be commodities, that could be equities, that could be bonds, any group of assets that can be tradable in the financial markets, an ETF can be created for them. So basically, once you have an ETF, there are some key similarities and differences to normal funds. So here you see the two sides. As far as the ETF is concerned, the big issue with the ETF is the liquidity source. When you want to trade an ETF, you can trade it intraday. You can trade it to each other, rather than having to redeem it at the end of every day to the manager. If you do a redemption, the manager tells you, okay, no problem, give me your form. After I see everything is in order, 3 days later, you can get your funds. That is one difference with ETF. ETF, you can actually express your interest. Let's say you think that the market is going to go down. You want to sell immediately. You can sell immediately. That ability to provide you with trading real time, that is a big difference between an ETF and a unit trust, or what we call a mutual fund. So basically, that is the big thing. The second thing is pricing. You do not know the NAV, for example, of a fund until the day closes. The manager does all the accounting and then produces an NAV, the net asset value. On the other hand, in the market, trading price is continuous. The market can show you where the market thinks the price of this particular bundle of securities is. So you get an active market, and I will show you the difference between these two prices. The NAV, which is the underlying net asset value, and the market price. There is a chart that I'm going to cover later on in the case study. So at the end of the day, when you're transacting in a unit trust, you're transacting at NAV. When you transact in an ETF, you're transacting at the market price. And the market price is determined not only by the NAV, but also by market forces, supply and demand for that particular ETF. So I think the advantages are pretty clear. Many of these advantages go from enhancing market liquidity, for example. You have a continuous process where we can create new units, we can redeem units if necessary, we can strengthen price discovery because now we have an institutional investors who are continuously in the market, able to be buying the underlying securities and making a market. We also align with obviously promoting our markets because we make them more liquid. ETFs can provide investors with more diversification, ready-made portfolios, lower their cost. All of these are positives that grow the market structure and improve the depth of markets. And this is one of the things I think that the Islam Stock Exchange has really been very helpful on. By adding all these new instruments, it has able to deepen the opportunity set available to investors on much more regular basis. So the difference between a unit trust and ETF, as I said, is the creation and redemption process. And this creates two separate markets. There is a primary market and a secondary market. The primary market is the market at which new units are created. New units or they are redeemed. That's the primary market. That is done by a special intermediary called the authorized participant. So you have to have authorized participant who makes that interaction between the market and the fund. But on the other hand, once the market has those units, the secondary market takes over where everybody can operate. Every broker, every market maker can participate and buy and sell this instrument. You know, it doesn't matter who's the manager of the ETF, everybody can trade in that ETF once it's listed on the stock exchange. So that is the big difference between the two. It's the fact that in a unit trust, in a mutual fund, you only have the primary market. You want to subscribe, you buy it from the manager any single day you subscribe. You want to redeem, you redeem from the manager. When you go to ETFs, you have two markets. There is an authorized participant who operates in the primary market continuously creating or redeeming units, and then there is a secondary market where investors are buying and selling to each other. So in short form, the authorized participant actually acts as the stabilizer. So it's the job of the authorized participant to supply the market when there is a huge demand and to redeem from the market when there is a huge oversupply. That is what aligns the NAV and the market price. Now, no ETF in the world can absolutely align. The deeper, the bigger, the more traded an ETF is, the closer it will come to close this discount or a premium or discount between the market price and the, but usually this will be there for many, many reasons. One of them is obviously the cost of trading cross-border, okay? So there is also the element of settlements, time. You remember when money comes in or is creation or redemption, it takes time to execute those transactions. So these differentials always create a gap between when units are available. Let's say, for example, as a market maker, you get a huge demand. You cannot immediately create the units because you have to find the underlying shares, give it to the fund in kind, have them registered, come back again, get the units created, and then sell them. By then, the demand has already pushed the price up, and suddenly the ETF is trading at a premium. And the reverse can also happen. The ETF can trade at a discount to NAV. But obviously, the premium and discounts have to be within a certain range so that we are able to actively, as authorized participants and market makers, keep the range between the real value, the NAV, and the traded price as close as possible. Obviously, an ETF like an S&P 500 iShares, for example, is going to have a very minuscule premium and discount. While another, let's say, frontier market ETF, even globally, you may find as high as 14% discounts and premiums. So it depends really on the nature of the underlying assets where these differentials can occur. So let me just take us now through the case study itself. And the case study is about this regional ETF, the East African ETF that was listed on the Dar es Salaam Stock Exchange. Now, just to give you a little bit of a flavor, the IPO was done late last year. It was listed on January 28th. And the IPO itself, the target for the IPO was about 10 billion Tanzanian shillings. It raised, we had a subscription of about 54 billion. That subscription rate is massive in terms of Tanzania. It really showed that there is actually pent-up demand from investors looking for opportunities in our capital markets to invest in securities, in equity securities that build up this particular ETF. So that was very successful. But that's actually not the big success, even though that was 5.4 times more than the target price. Post-IPO, this ETF continued to grow. The AUM have now approached 3 times, almost, not there, but almost 3 times what it was during the listing. So 147 billion currently assets under management in this particular ETF. The NAV is 1,288. This is just a few days, I think the day before yesterday. And that means that from January 28th, this has had a return of about 29%. That is a very exceptional performance, particularly in a turbulent, volatile period where you guys know what happened to emerging markets in March and April, where stock prices actually came off significantly. But the ETF itself is so diversified, the dividend yields were quite high, underlying companies are making record profits. So we ended up actually having an ETF having a return of almost 29% year to date. Yeah. So the ETF itself actually invests in East Africa. The 4 exchanges in the East Africa are all represented in the ETF. That's Tanzania, Kenya, Uganda, and Rwanda. All 4 of them are in this particular ETF. So what makes up the ETF? The ETF, when it did its IPO, the initial asset allocation looked like this. As you can see, East African equities are really dominated by Safaricom. Now, this is what we call a semi-active, because it partially indexes. There is a particular index of EAC securities that it follows. But because of liquidity and tradability, we cannot follow too tightly, so we do have a range. So if you read the offer document of this ETF, you will see that it has a range. But particular where we started is, even though Safaricom was 46% of the market cap, it is not pure index to 46%, because that would be too high an exposure to a single stock. You can't build an ETF and become almost a quasi index to Safaricom only. So Safaricom's weight was 22% at that stage. Today I will show you what the current Monday, because we disclose the asset allocation of this ETF every Monday. It's on the website, it's on the Dar es Salaam Stock Exchange website. Every investor who invests in this ETF can know how much do you have of the particular stock. I always get a very interesting question, people asking me, oh, how much of Safaricom do you own? Anybody who wants to know how much of a Safaricom do you own, you just take the percentage here, multiply it with the AUM, right? The moment you multiply by AUM, you know the amount invested in Safaricom. If you divide by the price of Safaricom, you get the number of shares of Safaricom. So you can work backward from the percentage and the AUM to work out what are you holding. And then if you invested every 100 shillings, it means 22 of those shillings you invested in is in Safaricom stock. KCB 11.14, NMB Bank about 10.21. Now for those of you who know these stocks, you will immediately realize why this ETF did very well. Simply put, in January, if you went back and you looked at where Safaricom was trading, it was probably trading around 28. Today it's trading at 34. If you looked at NMB, it probably was trading at, what, 12,000? Something like that, 11, 12. Today it's trading at 16,000. If you looked at KCB, maybe it was trading in the 60s. Today it's trading almost close to 80. And then, of course, you got the dividends in June, in May, June, July. There are more dividends going to be paid, but they all probably went ex-div around that time. So you can see why it has done the returns that it has done. The returns are driven by the underlying securities. So security selection, index construction, portfolio construction matter a lot, and this is how we constructed our EAC ETF. You can see the other stocks there. There is MTN Uganda, so we have Ugandan stock there. We have Jubilee, that's a group, regional assurance group. We have the cement companies. We have CRDB Bank. We have Equity Bank. We have BAT, which is the tobacco company listed on Nairobi, British American Tobacco Kenya. We have Stanbic Bank Uganda, and then we have the Bank of Kigali, which is about 56% market share of banking sector in Rwanda. So this is a major, major bank in the Rwandan economy. So this is what makes them up. We have allowed for 12 to 25 stocks. So there is always going to be additions and removals. There is going to be rebalancings, and we do rebalancings on quarterly basis. So the ETF quarterly changes the composition. But it can daily also move a little bit because we have allowed for some movement. We cannot tightly follow an index because our markets are not liquid enough. We are not S&P 500 where you can take any amount of money, divide it up according to the market cap, and just drop it down into trade it on daily basis. We cannot do that in an African exchange where the liquidities can be very, very tight. Sometimes those shares are not available. Sometimes prices can move up a lot. So we have actually followed a little bit of a looser semi-active strategy for the ETF. On the benchmark side, we do use this benchmark, which we look at our performance versus the performance of this particular benchmark, weighted according to those percentages. The TSI, the Tanzania All Shares Index, we have 38.99. The Nairobi All Share Index, about 46.78. It follows really the asset allocation. So depending on this ideal asset allocation that we have created an index benchmark that allows us to see, are we really adding alpha? Is the manager outperforming a passive index, for example, composed with that ratio? Now coming back to the rebalancing, the first rebalancing was done in Q1 2026. That particular rebalancing allowed us actually to expand and increase the diversifications because we added one new stock. And the stock that was added to the East African ETF was Stanbic Bank Kenya PLC. It allowed us to increase a quality bank into, and we reduced a few other weights because we realized that some of the stocks were very, very liquid. So there were some stocks that lost some percentage to give way for Stanbic to enter the index, and that allowed us to rebalance properly because you could not find some of the smaller illiquid stocks in this particular index. So what is it now? This allocation is as 26th of June. If you go to the DSC website, you will find every Monday this published. So you see what is in today, in this particular one, this Monday, Safaricom was 19.73, KCB was about 15%, NMB was about 11, and at the bottom you see cash was about 0.5%. The ETF generally, because it doesn't deal directly with unit holders' redemptions, it doesn't have to hold as much cash as a unit trust does. Unit trusts have to hold more cash because people can ask for redemption at any time, and you have to pay them in 3 days. The ETF deals through an authorized participant. It's the job of the authorized participant to make sure that they create or redeem. So the fund can be much more stable, it can invest a lot more, and that is one of the sources of performance for an ETF of a unit trust is it doesn't have the friction cost of holding too much cash because it can be fully invested. That works in good times very nicely. In terms of country, I think you can see those two pie charts at the end there, and sectors. So let me start with country first. You can see Kenya is almost 50.6%, Tanzania is almost 35%, Uganda is about 10, and Rwanda is about 5. So that gives you a rough indication of the asset allocation of the ETF. This is truly a cross-border East African ETF. And then secondly, you see the sectors, banking about 44%, and that has actually been driven up by performance of the banking sector in the region. That's actually why their weights have gone up a little bit. But we didn't start off with that much in banking. It just became part of the capital gains, and that has driven the weight of banking upwards. But telco is about 28.4%, manufacturing about 21.5%, and insurance about 5.2%. We don't have many listed insurers who are at scale. Jubilee is the only one, and it's not a very particularly liquid stock. But otherwise, just to give you an idea about the trading side, these two charts really outline for you the performance since listing of this ETF. The chart on the left side gives you the market price and the NAV. Now, when you see a gap between these two, it means either the NAV is above the price or the price is above the NAV. Whenever the price is above the NAV, the ETF is trading at a premium. And then vice versa, if the NAV is above the market price. So you can see in the beginning, the IPO price was 1,000. On listing, the NAV was already higher than 1,000. I believe it was something like 1,060 something. Immediately the price took off. Why did the price take off? Why do you see a big premium in the first month or so, first 4 or 5 weeks? Look at the volumes. You had a massive inflows. That's how the market cap of the ETF grows. You have a massive spike of volume, 4 million, 8 million, 7 million. There was a massive demand. And because there is a massive demand, by the time the manager, the AP, creates the units, the market price is already moved higher because it takes a few days to get the units created. You need to find the underlying shares, you need to give it to the ETF has to create the units have to be registered by CSDR. If the whole process takes you 5 days, the demand is so high that the price starts moving above NAV. So you start chasing it, and you create more and more units. And then suddenly what happened? The Iran war happened. Immediately on the Iran war, look at what happened to the volumes. Now, if you guys remember, 28th of February is around where the Iran war started. Immediately, what do you see? Volumes dropped. So when volumes dropped, now the market is trading very close. You see this period here in the middle, the NAV and the price are very, very close. And eventually, because the war dragged on, oil prices shot up, investors are getting more cautious, they're pulling back. NAV actually went above the market price. You can see the market price coming down quite sharply. So you see a market price that was 1310 all the way to 1140. That's where it bottomed. And it bottomed at 1140 precisely when the talk of ceasefire started. That is a great experience. The market is actually adjusting to news flow. And then what happened after that? The market price started coming up. The NAV kept going. The NAV actually didn't move much. That is a surprising thing. The NAV is actually not that volatile. This is a very, very diversified portfolio of equities, multi-country, multi-sector. So as you can see, the red line throughout the war was very, very, very stable. And then recently, in mid-May, it started going up. Today, you can see the NAV is higher than when the war started. When the war started, the NAV was 1213. That's this number here, 1213.17. Today, it is 1288. And the market price has started also following the NAV upwards. Now we are looking at 1260. The bottom was 1140. So there is a level of adjusting, a level of volatility that follows the market. The discount right now is around 2-point-something%. It's well within range. But obviously, if investors' interests pick up again, you may literally find the price going above the NAV again. And suddenly the ETF is trading at a premium. Right now it's trading at a small discount. There are periods where the premiums were quite high. There are periods where you see sometimes shock. Let's say, for example, at the bottom there, the NAV had not moved. In fact, through that bottoming process, the NAV had actually gone upwards. And that is one of the interesting things we learned by running this particular ETF. The investors are actually learning how to price it. They're learning how to trade it. And this has really opened up the Dar es Salaam Stock Exchange. So I hope that gives you a bit of a case study. And with that, I think I'll be open to questions if there are any questions are being taken. Otherwise, this will be the end of my presentation. Thank you.
Another big round of applause for Professor Sami. Now, because he's a professor, we can give him an opportunity to answer questions because he's used for that debate, okay? And this is a moment, if you have a question or if you want to top it up, I think this will be very interesting. And if we can have ushers move around with the microphone, please, that would be the great thing we can do so that we can give the portfolio. And we have a gentleman here to start with.
Thank you very much, Professor, for that very, very well laid out presentation. My name is David Wenaina from Nairobi. So I had one question, Professor. In your portfolio analysis, you indicated that the securities that form the basket, they come across the region. So the question I have for you, Professor, is there an opportunity for you to cross-list the ETF so that you give Tanzanian an opportunity for arbitrage? Thank you.
Thank you very much. I think that is a great question, and I accept that is the natural direction. In fact, that's the direction of travel. We need to start off with testing it in Tanzania. Sorry, I hope everybody heard me. I think that is a natural way that these ETFs will move. As you noted in the beginning, the ETFs were only 17,000, but there were 33,000 listings. They are cross-listed. Many times you find them listed in 4, 5, 6 exchanges. So I think it's a natural next step to be that you list in Kenya, you list in Uganda, or you list in Rwanda, to provide an opportunity for everybody in East Africa to be able to trade across all this basket. This basket is made up of East African equities, and it should be traded by East African investors in their local in their local markets. But we started off with Dar es Salaam because we needed to understand and test and learn. But I think the natural direction of travel, you will see a lot of cross-listings of ETFs over time. Now, there are a couple of challenges. Obviously, there is challenges around familiarity. Different markets, you see, when the ETF is very small market cap, going to many markets makes the cost very high. As the ETF become large, the ones that are cross-listed are large ETFs. If you're managing an ETF with market cap of, I don't know, $500 million, it's very easy to cross-list. But if you have a $10 million or $20 million, the cost of listing in multiple markets becomes prohibitive. So we do understand there is an economics involved that at some point but we need to have a base, and then the other problem is you need to have regional APs and market makers. You don't want the ETF to be very liquid in Dar es Salaam. In Dar es Salaam, I didn't mention actually, one of the things we noted is any particular day, the ETF will be the number 2, sometimes number 3 most traded security. So it is actually generating, even though the volumes don't look much, but it's still, when you look at the listing, it is number 2, sometimes number 3, sometimes even number 1 traded security in the exchange. So liquidity becomes an issue. APs who have enough capital. You see, the other problem is the AP has to have enough capital to market make. Now, how many APs or brokers that we know in East Africa can allocate $1, $2, $3 million to hold as inventory to supply the market? Because that is also a very big challenge. The capitalization of our market participants. Because this ETF requires you to be able to stand in the market, buy out when people are selling to you. For example, that volume that you saw when the market was dipping, that volume was mostly people selling back to the AP. And immediately what happened? We had to go to to CSDR and start the redemption process. Take the underlying securities and then sell the underlying securities, get the liquidity back to support the market. But in the meantime, you as an AP, you are holding in Tanzanian shilling maybe 5-10 billion shillings worth of units, because that's what the market is supplying you at that moment in time. That capitalization is critical. So if we were to look for cross-listing, we will need to ask ourselves those questions. Who can be an AP in Uganda? What capital do they have? How much are they allocating? How will they support the Ugandan exchange to make sure that the ETF is liquid? The last thing you want is it is illiquid, people have invested in it and they're stuck. They can't sell and suddenly your reputation runs into challenges. But it's the direction of travel. At some point it will happen.
Good afternoon, ladies and gentlemen. My name is Jacqueline Shio from Solomon Stockbroker, Senior Investment Analyst. Thank you so much, Professor Mohammed, for a very wonderful presentation. It was interesting concerning the matter of the ETFs in Africa. Yeah. My first question was concerning the cross-listing, and automatically it's answered. But another interesting question that I would like to get an answer to is currently that the iTrust ETF, its portfolio positioning, it's very diversified. So what are the impact in case you maybe adapt and rebalance the portfolio and introduce a feeder ETF like the Satrix MS, like the world feeders ETF? What are the risks that you see that are going to trigger the nerves and so forth? Thank you so much.
Thank you very much. I think, let me mention first things first. Solomon Stockbrokers was my first stockbroker when I came to Tanzania and the DSE was started. Mzee Solomon, the late Mzee Solomon, I went there, he gave me an hour or two talking to me, and I participated in the first IPO, Tanzania Oxygen. It didn't do well for me. I lost a lot of money in that one. Probably I lost my first few months of salary in that IPO, but I did learn a lot, and it was through Solomon. So I have a very fond memory of Solomon, even though I lost money. Yeah, that was not Solomon's fault. But coming back to your question on feeder funding. So one way of doing the same problem actually that was mentioned in the first question, you can cross-list, or you can create feeder funds. So you can create a brand new fund whose job is to invest in this fund. That's what a feeder fund is. It's a fund whose job it is to collect and then invest in the master fund, right? In the main fund. So that could be one way of doing it, but probably it'll be more expensive way of doing it. The easier way would just be cross-list. Cross-list would probably be cheaper. So the two of them, now you can create feeder funds for other things. For example, you can have feeder funds that invest in other funds that are outside Tanzania, for example. Now that will be subject to Tanzanian laws. You know, our capital accounts is still closed. Tanzania is a bit unique in the region where we are not allowed to invest Tanzanian capital across all borders. We have restricted, prescribed areas, you know, SADC and East Africa. So we do have those kind of challenges. So feeder funds are an interesting concept. They work internationally. Will they work in our particular environment? We will see. You know, it's not something that, they are a great concept, but there are challenges with them. So your question stands that, can you create, let's say, feeder funds for this East African ETF? Yes. Will it make better than cross-listing just the ETF directly? Maybe not. So I'm not sure really, without doing more research, exactly which path will be better. But that's something we'll work upon, for sure.
Thank you, Prof, for that wonderful case study. My name is Kopano from Botswana Stock Exchange, and we are one of the largest in terms of the number of ETFs listed, but also the commencement of such innovation about 16 years back. So what I want to understand, and in fact we are listing 3 feeder ETFs next week Thursday, which whose underlines are global equities, so S&P 500, MSCI World, and MSCI Emerging Markets. What I want to understand is the categorization of participants in this particular ETFs, retail versus institutional, foreign versus local, and also get a sense of how pension funds are enabled or incentivized to invest in ETFs, and what are there any bottlenecks? Yeah. Thank you.
I think actually you made a really great point. I think Botswana is one of the trendsetters in terms of listing ETFs. And for those of you who don't know, there is a Botswana listed property REIT that owns Mlimani City. Our biggest mall in Tanzania is owned by a listed property REIT in Botswana. And this point around who actually comes into the ETFs and what kind of investors find it interesting. Actually, when we were doing this, we thought institutions will be the ones who are going to be the main driver. It turned out otherwise. It turned out to be retail. And we're not really sure. Not that institutions did invest. Institutions invested. They invested significant amounts. But they have different bottlenecks. Number one bottleneck is many of them have very prescribed investment policies. In Tanzania particularly, their main regulators give them a list of allowable assets. So the insurance guys have it. Now ETF is a new product. Many of these regulations and lists were created decades, very long time ago. They've not been updated with market reality of instruments that are coming into the market like ETFs. So we are engaging them, but they did invest. They just invested it like an equity. They treated it like a part of their equity allocation, and then they invested at smaller sizes. One of the issue was, of course, when we went to market also, our target was small, 10 billion. So in most institutions, they can only give you they don't want to take up too much of an issuance, so they give you a certain portion of that. So what happened really is that they did take a chunk, and they have bought some later. They have invested in the ETF subsequently. But it is a great way for them to get exposure to regional markets. For example, a Tanzanian sitting here investing in Botswana is very challenging. But an investor going through an ETF can get access to the Botswanan equities, for example. So I think the retail has been the real driver. And within retail, there's two groups in there. There's people of high net worth, big decently sized investors, and then you have the retail small investors. The small investors are really many. I mean, the bulk of investors are going to be these small investors who are investing smaller amounts, but consistently. One of the behaviors changes that DSC has brought about in our market in Tanzania is the behavior change. People are now consistent savers. They're able to, and one of it, I think there probably I saw a few of our certified financial educators here. That was a great initiative. Please, if you are a CFE, raise your hand. Yes, I did see a few. They have been able to educate the market. They have been able to go to the retail and teach them about saving behavior, putting up, investing regularly, dollar cost, well, we call it dollar cost averaging, but just cost averaging, meaning that you buy in the high, you buy in the low, you get an average. Over time, you do well depending on the market performance. That is the education that our CFEs have been giving out in the market, and they have done a wonderful job. The retail has really come up alive. I think it's not only Tanzania, by the way, also Kenya. Retail, for example, what Safaricom did with ZD Trader, brought in a huge volume. Yes, they account for the most of the trades, but value-wise, maybe they account for 2% of the market. But that 2% is very active, and it is growing. It's going to people will start off with small amounts, but eventually they will build up their portfolio to larger amounts. So there is growth ahead. I think Dar es Salaam Stock Exchange's initiative in inclusion, the enabling environment of our regulators, and of course, changes in the market education that is being done has really brought about. So retail is the driving force, in short.
Thank you, Professor. My name is Isaac Kayamba from the Uganda Securities Exchange, and mine is just really a follow-on from his. Are you seeing any foreign demand, and by foreign I mean outside of East Africa and the SADC region, maybe Europe or the Americas? And you also mentioned Tanzania's capital account being closed. That tends to also affect you in a way that people don't also want to bring in their capital. But are you seeing any foreign, in that perspective, foreign investors?
Yeah. I think the question you raised is it has multiple things inside it, in sense that Tanzania's capital account is closed for Tanzanians in Tanzania moving capital outside SADC and East Africa. It is not closed for investing within SADC and East Africa. It's not closed for foreigners. For foreigners bringing capital from outside, your only bottleneck really is administrative. You need to have a custody account with a custodian bank in Tanzania. Then you can open a brokerage account with any broker and trade in Tanzania. And then you are free to redeem your capital and your gains at any time. Subject, of course, to FX being available. There are periods where FX could be queued. I'm not saying the FX is not there, but the FX prices may be volatile. There are stress times in any emerging economy whereby investors will start talking about, it took me 7 days to get dollars or something like that. But beside that, for foreigners, welcome. What we are actually seeing is the diaspora leading the way. It is the people who know their individual countries who are bringing money back. Diaspora flows to East Africa have really, really increased. And many of them used to do it to support family members, to buy some farm, to buy a house. Now, more and more, they're bringing the diaspora flows to invest in the capital market, to buy bonds, to buy shares. So we are seeing diaspora. So the more we make it easy, this remittance companies interlink with our system, wallets are funded, trading accounts are funded. I think it's the Ugandan diaspora, the Kenyan diaspora, the Rwandan diaspora, the Tanzanian diaspora who will lead the way before the foreign retail investors. There's a famous research in finance called home bias. People have a bias to invest in their own market. The familiarity, they know the broker, they know the stocks, they know the companies, they're comfortable with their currency. There is a home bias. Ugandans want to invest in Uganda. Kenyans want to invest in Kenya. Tanzanians want to invest in Tanzania. It's only products like this that break the barrier and try to integrate and offer products cross-border. With Uganda, for example, one thing I didn't mention with the ETF, our custodian is APSA. So APSA Kenya, APSA Uganda. And for our trading side, we deal with another custodian. And we deal with local brokers. So one of the challenges we face with Uganda is the liquidity of the underlying securities. If you noticed, we have two Ugandan stocks, Stanbic and MTN. They are phenomenally difficult to get hold of, in the sense that they don't trade a lot. So when you're creating an ETF and you're looking for volume because you're creating units, and the units, you don't have the stocks, you run into this problem. So one of the things that maybe ASEA and maybe Uganda in particular can look at is how to make your market, number one, increase the number of listings, and number two, increase the free floats and more active trading, active on the exchange. I don't know how that will be done, but that's your challenge. You gave me a question, I gave you a challenge. Fair return. All right.
So we're going to take two questions to summarize, because now lunch is between us and this presentation. Okay, it seems that this side is very active compared to this side. I don't know what's happening. Oh, finally, there is a rescuer. Thank you for rescuing this side.
Thank you very much. My name is Edison Kachipuga. I'm from Namibia, Capital Market Space. I'm also the Vice Chairperson for CISNA Capital Market Subcommittee at the SADC. Good initiative. I heard my colleague asked there for interest in foreign investors. Obviously, it's subject to the rest of the market being aware of it. I mean, we're living in countries where pension funds are the biggest investors, especially in SADC. And products such as these ones are very, very, very attractive products to look at them. Listing has been a problem across the globe. ETFs are one of those emerging asset classes that are looking there. So I think, colleagues, my weight here is that let's create awareness through SADC. Africa have got the money. We're just looking for instruments, and I think this is one of the very lucrative one. It looks very good. Thank you, colleagues.
Thank you very much. Thank you. I think one thing I need to mention is I did see Orbit here, and the MD, Godfrey, was sitting there. He's not there anymore. He's the chairman of our Brokers Association, TSEBA. And that challenge you gave us on listings, I'm going to throw it to him. He's the chairman. He better do something about it. Where is Godfrey? You know, when you need him, he is out. Ah, there he is, coming in. Godfrey, you have a challenge here. We need, as brokers, to bring in more listings. They're coming, the chairman has spoken. But coming back to your question is, as far as Namibia is concerned, first of all, Africans have capital now. I can tell you one thing about Tanzania. We are amazed at the saving, because our population has really grown. The other thing is our demographics are changing. We are actually entering our peak economic capacity, meaning that before now, the population was so young, the bulk of the population was so young that the dependency ratio in Africa was very high. So what happens in any economy is, when you have the working population, let's say the parents, number one, the parents themselves were not highly educated, so they were not doing very modern economic activities. You know, mostly they're in agriculture. And then they have 6 kids, 7 kids, 8 kids. You find that a lot of the capital is drained because of that demographic. Now, as urbanization picks up, and secondly, the birth rates come down, and parents are now starting to have 3 kids, the women enter the workforce, the saving rate goes up, and now we are entering that period where our 17+ age is starting to balloon. Africa is pretty much going to create the world's largest growing workforce by a mile, historically ever. The population growth that is going to occur over the next 20 to 30 years, entering a labor force. Now, unfortunately, we are also entering the labor force at a time where the global economy is bringing in technologies that are also going to stress labor, human labor and human creativity. Now, how those two things will interact, whether it will turbocharge, whether AI will turbocharge Africa's growth or become a detriment, we cannot tell for now. That's another debate. But suffice it to say, saving rates are growing. We are finding flows into financial markets. Now, for the first time, we are finding a problem, a bottleneck. The savings are there, but the capital markets are not bringing in the kind of listing. Namibia, for example, I'm quite familiar with, and we're doing some research on the SADC markets. You haven't had many listings. You have South African cross-listed. You know, the local businesses have to absorb the capital, go and build refineries, factories, go build cities, infrastructure. That is where in Africa now, we are lacking basically the entrepreneurial drive. The entrepreneurs who will organize it, take the capital from the saving of the middle class and the emerging working class, and repurpose it to economic growth. That is an economic policy matter. That is government matter. And we are seeing that that's becoming a bottleneck now. I hope it's solved by this SADC and East African governments in general, and we unleash the creativity and the entrepreneurship of the African population.
A round of applause, ladies and gentlemen. Now, I promised the two closing questions. One was done, now we are getting the final question. If I can see the raise of the hand, please. And probably want to rescue this side again. Any rescuer? All right.
This side has very tough questions.
I can tell.
Yeah.
Oh.
Very, very big level, high level questions.
I could tell. And the way you were cutting across Africa, I really appreciate. Not only in Tanzanian, but the African context is really being accommodated. Makofi mengi kwa Professor jamani. Na upiga mwingi. Okay, so final one, final remarks. All right, then we shouldn't hold you more than that. Asante sana. Makofi mengi kwa Professor tafadhali.
Thank you.
All right. Thank you so much, Professor Mohamed Waresame, the Director for I Trust Finance. And I think if we could have more time, you could be giving us more insights, but we appreciate for those sentiments that you've just shared with us. Na kwa sababu ameshafika amekaa salama, tumuongezee tena makofi mengine tafadhali. So ladies and gentlemen, I have two announcements to make before we break for lunch. I should remind you that in the evening we have a dinner gala. Now this is one of the galas you never want to miss. It won't be held here. It will be held at Maki. It's the same venue, the same premises, but there is another venue called Maki. You never get lost, so please relax. But the element of it is that the dress code will be traditional. Now, you might not have packed traditional attire. You might wish to take even the bed sheet and just roll it around. In African context, that will be tradition, isn't it? This is the point that, the stressing point is that we don't want you to miss the gala. That's the point. And the worst case scenario, if you even miss the bed sheet to cover yourself, please just come with the same attire that you are having. That won't preventing you. But probably there is a surprise gift, I'm not sure, for the best attire. I'm just preempting the ASEA to see through. Okay? Labda atakayependeza zaidi ndiye atakayepata zawadi. I'm not sure. Second announcement is that tomorrow is one of the biggest day for Dar es Salaam Stock Exchange, as we are celebrating 30 years of existence and resilience, but above all, the breaking of the market. And therefore, you are currently invited, but I think the invitation has been sent. So if you have the invitation, please, this is another day you never want to miss. It's another event that you don't want to miss. It will be very important for every one of us who have the invitation to come and attend this amazing celebration of 30 years. And I think on the same token, DSE once again, they deserve another big round of applause. Peter ongera sana na management yote. You have done an incredible job. I'm telling you, the market of Tanzania is the strongest case study on how digital transformation ambayo mmeifanya inaweza ikafikia Tanzania wengi zaidi. So the concept of inclusivity is highly entertained in DSE, especially DSE kiganjani. That concept, whoever came up with, sijui kama alipewa bonus, ila tunamshukuru sana. Last but not least, ladies and gentlemen, we will have a closing, should I say a ceremony, this afternoon, after lunch. We are remaining with two presentations, one presentation and then a panel discussion, and after that we're going to have a closing ceremony, or closing keynote speech. And the one to do so is our registrar, treasury registrar. He will be here. So we'll love you, please, to not go away. It's very, I don't know, I'm lacking the vocabulary to put there. When the registrar is here and they're only to find 50% of the population, and then he'll ask Peter, is this what you have been having all these 2 days? It will be very difficult for him to explain to the registrar. So please make sure that you come and be here so that we can close together, and probably we'll have another additional information regarding the gala and regarding the 30th anniversary ceremony tomorrow. After that, I think everyone has a coupon except me. I don't know why. But that coupon is for lunch, is for you to enjoy your lunch. Bon appetit, and our lunch time starts now. Karibuni sana.